Welcome to the European market open, everyone. A minute to go until the start of cash equity trading on Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Sealing the deal. Elon Musk wins Twitter for $44 billion. The tech giant's shares jump. European banks kick off the reporting season. HSBC and UBS beat on profit despite the war in Ukraine. More from our interviews with HSBC's Chief Financial Officer and UBS's CEO this hour. Plus, to the rescue, the PBOC pledges to boost support for China's economy. We'll speak to George Magnus, Oxford China Research Centre Associate this hour.
Tom, I'm really looking forward to actually our conversation with George Magnus. And John Arthur's putting it right. We're so obsessed with Twitter. Let's not forget China as well. For the moment, futures are actually seeing a bit of a lift, a rebound from a 6-week low. Risk appetite back after PBOC stepping in.
Yeah, and there's some important context here, which is it's rhetoric so far from the PBOC, and the response from China's policymakers has been rather muted in the last weeks and months as they weigh up the lockdowns in Shanghai and now the risk of a lockdown in Beijing. So will they actually follow through and pull out the big bazooka following the Politburo meeting that takes place later this week in Beijing? That will be firmly and closely watched, of course. In terms of the read-through from the Asian session, yes, the MSCI Asia Pacific is in the green, but the mainland shares, after a strong start, started to turn around. Again, some doubts there amongst mainland investors as just to how far and how fast the PBOC and officials in China are really prepared to go. Here, in the first few seconds of the open across the European space, you're seeing gains, solid gains of around 1.4% on the Spanish IBEX, 1% on the FTSE 100, that's up 77 points, and the CAC 40 over in France up 0.9%. So reversing some of the heavier losses we saw across the European session yesterday. Wall Street, of course, ending in the green. Let's switch it on and see how things are focusing and lining up for the future stateside, as we also, of course, weigh up earnings. It really is about China and earnings today. The central bank story is put to one side slightly because, of course, we're in the dark period when it comes to the Fed. S&P futures down a little over 0.1% at 4,285, again, after posting some gains yesterday. Earnings, still 80% of those earnings coming through from the US have beaten, and we continue to watch that, of course, with the European banks today. CSI 300, I wanted to bring this to attention again because of the turnaround that you've seen in sentiment. The mainland, the morning session, very strong indeed on the back of those comments from the PBOC, but that has reversed. Again, investors questioning just how much support they're expected to get, currently down 0.8%. The US 10-year at 2.82. Not a lot of movement here when it comes to the benchmark treasuries. We continue to watch that space. And WTI remains below $100 a barrel. There's some question marks about that demand hit from China. $99 a barrel WTI, currently up 0.6%. Francine.
Yeah, Tom, rule number one in TV, don't have a suite, especially eucalyptus, if you're about to do a market check. I broke my own rule, but that's all right, because if you look at the sectors, all of them are actually in the green. So we have 17 sectors. The one that's losing or gaining the least is actually healthcare, is still gaining some 0.3%. And we have energy, basic resources, auto parts between 1.3 and 2.3%. So you see, there's a lot of green on the screen. It's just one or two stocks that we need to watch out for. Healthcare, for example, there's one stock down. But there's, again, this buoyancy on the markets thanks to PBOC. I don't know how long it lasts. And again, yesterday was a risk reversal. So it does seem that, every day the market switches the focus.
And it's the bank earnings that are in focus for us today. The broad story, the broad headline is that every single one of these banks beat in the first quarter, but they're the idiosyncrasies when you lift up the hood. HSBC letting us know about a $600 million provision set aside for exposure to the real estate market in China, but also Russia, Ukraine, currently down 1.6%. We had that interview with the CFO, but the top line for HSBC was that it was a beat in the first quarter, but concerns about that exposure, continued exposure to China, of course. UBS Group, we'll be speaking to their executives as well, up 0.7%. Again, the top line was a beat. It was helped by the investment banking part of that business. And Santander, the exposure, that geographic exposure for Spain's largest lender, helping to boost their first quarter as well, currently gaining at 2.6%. So the biggest gainer across these three is Santander at this stage. Francine.
Tom, let's also get over to our Bloomberg M Live managing editor. He's Mark Cudmore with great, of course, analysis. As always, looking at the markets, as in terms of a chart, you're actually looking at financial conditions and the difference between the Chinese and US.
Absolutely, Francine. As we all know, one of the big themes this year has been the aggressive tightening of financial conditions in the US and what problem that is causing for assets. One of the other big themes is, of course, what is happening in China and some of the concerns there. So I wanted to give some longer-term context to compare financial conditions in the two countries. So this is over the last 10 years. This is the Goldman Sachs Financial Conditions Index. For China, the white line at the top, and for the US is the blue line at the bottom. Now, the first thing to point out is the higher these lines are, the tighter financial conditions are, the harder it is for markets. The lower it is, the easier for markets. So first of all, the blue line, what we've seen this year is a really aggressive tightening. But you've got to remember, it's an aggressive tightening from the loosest financial conditions ever seen in history at the end of last year. And that's why we had these major bubbles in assets. That's why the equity market went way further than everyone expected last year. But suddenly there's a change. But it's still, when you look at the metric, this green line shows the level we're at now relative to the last 10 years. We're still at looser financial conditions than most of the last 10 years. And that's why equities have seen volatility because of the rate of change, but they're not suffering too badly. And on a longer term horizon, they're still up a lot. I would say the conclusion is this is a mean reverting index over time. It is going to go a lot higher. The Fed is very hawkish. Financial conditions are going to tighten aggressively. But the point is, the US is only at the start of its financial condition tightening, which is why there's much more pain to come in US stocks over the coming 6 months, over the next year. The opposite picture in China. This is China's financial conditions. Now, they are actually at the highest level since 2016, when Trump was elected as president in the US. And what we've actually seen is this has been a steady tightening over the last year or so, which is why Chinese shares and even greater China shares, like in Hong Kong, have been gradually weakening over the last year and extremely discounted. Again, this is a mean reverting index over time. So this is towards the end of the cycle, i.e. the pain in China is closer to the end than the start. In the US, we're still near the start, I'm afraid.
Okay, wonderful context on the financial conditions, the difference that we're seeing in China versus the US. A lot of dry powder, it seems, still for the PBOC and officials in Beijing, if they are prepared to use it. Bloomberg M Live managing editor Mark Cudmore, thank you. Now back to the big corporate story of the hour. Despite all the earnings, the focus, of course, on Twitter and this deal. Elon Musk has agreed to buy the company for $44 billion. It will be one of the biggest leveraged buyout deals in history to take the 16-year-old social networking platform private. Joining us now is Bloomberg's Laura Wright, who's been looking across this for us. Laura, what is the latest on this deal? How did you manage to get it across the line?
Yeah, it's across the line now. It's been a roller coaster month since we first learned that Elon had become the platform's largest shareholder back on April the 4th. So the magic number for shareholders, Tom, $54.20 a share. That is what the buyout will represent for them. And that is a 38% increase from Twitter's closing price on April the 1st, the last session before we knew of Elon Musk's involvement. Now, the board had to take Elon Musk's unsolicited bid seriously last Thursday when we learned in an SEC filing that, in fact, he had secured the funding, $46.5 billion, a mixture of investment banks and an equity commitment from Elon himself. Look, Twitter, they are reporting earnings this Thursday before the bell. Given the circumstances, there won't be a call on this occasion, and the deal is expected to close out at some point in 2022.
2022, so this is not far away. What do we know about his motivation to buy it?
He has complex motivations, Francine. He's a big fan of free speech. He sees that as a fundamental pillar of democracy. And Elon has been really critical of censorship on Twitter, and he wants there to be more transparency around this. He talks about the shadow ban committee often. Polarization, that's something Elon Musk is not shy of himself. And he likes the fact that Twitter challenges those on the most right and left-hand side of the political spectrum. And most simply, he wants to restore Twitter back to its former heyday. Elon dislikes the fact that accounts such as Barack Obama, Justin Bieber, which have more followers than Elon Musk, by the way, they're barely used, and spam bots. You might have questions, what is a spam bot? He tweets about this a lot, thinks it's one of the biggest problems on the platform. It's essentially faceless accounts, which can be created en masse for a political motivation, or it can be to hide an identity and to say disparaging things about someone else. And that's something Elon says emphatically he will deal with.
The bots will go. We're all very well aware of the bots. So I've encountered a few spam bots in my lifetime. Laura, thank you so much, Laura, right there on the latest on Twitter. Now, joining us is Richard Windsor, the founder of Radio Free Mobile. Richard, I want to talk about financials and what Twitter will become. But actually, do you think Donald Trump, after this takeover, will be back on Twitter?
I have no idea, Francine. What I did actually read earlier this morning is that he prefers to go onto his own social network. And I think, if that social network is going to get any real traction, then I suspect he may have to be there exclusively. So I have no idea, but perhaps not.
Yeah, so far he's only posted once, apparently, on his own social network. So that tells you something about how well that is doing. Richard, why was this a deal that the board had to accept, ultimately?
Well, quite frankly, because from the financial terms, what's really happened, I suspect, is, and we wrote about this when Elon made his first offer, which is when you run the numbers on Twitter, there is no doubt at all that $54.20 is a fantastic offer. And the value of Twitter in terms of cash flow gets nowhere near it. So consequently, to make an argument that this is not in the best interest of shareholders is very difficult to make and would take the board dangerously close to that breach of fiduciary duty, particularly when it seems that a lot of the larger shareholders were pressurizing the board over the weekend.
So, Richard, what is this? Like money walks and the ideology walks? What does it mean for what Twitter will become? Like, do we have any, thinking about whether it's a free-for-all, whether he'll really change it, whether he's trying to make money out of this?
I don't think he's trying to make money out of it for exactly the reason that the numbers don't add up. I think what you've got, this really has been triggered by a fundamental disagreement in terms of what is the definition of free speech, with Twitter's board on one side and Elon Musk on the other. Now, the net result of that seems to be that for the moment, Elon's argument seems to be winning. And so I would expect that when he takes over, if the deal closes, of course, there will be a big clear out of the current board and the current management team, and a new management team installed, probably closer to what Elon Musk's view of free speech is. Now, I think it's also important to stress that it's important that there's balance within that board, because you don't really want the pendulum to swing all the way to the other side of the spectrum, because then you end up with pretty much exactly the same problems that Elon says exist today.
Richard, you say that really the best days are behind it when it comes to Twitter. Is that because there are no additional measures that can be taken by this business to improve the outlook, or it's just that even under Musk, those changes are unlikely to be implemented? Why are you so negative on the business longer term?
Well, certainly because if you look at Twitter, exists in a niche in terms of what users do with their devices. It's tried many times to get out of that niche, and it has failed spectacularly on every single time. If you look at what Mr. Musk is saying, he is not necessarily saying we want to expand the reach of Twitter and change it into a much more widely appealing social network. That's not what he's going for. He's going for it to become a platform of free speech, which really means in terms of doing other things, perhaps more like Facebook or Snap or Google. That's not where the interest lies. And so, the revenue perspective of Twitter in the long term remains very much constrained by the fact that it remains in that niche. And so consequently, again, this leads you back to, this is a great deal for shareholders.
Richard, how risky is it for Tesla? There's a margin loan, and basically if some of the covenants of the loan are breached, then I think there's a chunk of Tesla that's just sold on the open market.
Yeah, that's right. So basically what's happened is, of the 46 billion I think he's raised, 12.5 of it is coming from what's called a margin loan, which means he has pledged some of his shares in Tesla as collateral. Now, typically what happens with these sorts of things is, if the value of the underlying asset starts to fall, the asset itself is sold into the market in order to pay back the loan. Now, so that adds risk for Tesla shareholders, and we've seen Tesla be very volatile in the past. Now, one thing important to note is it's a $12.5 billion loan secured with 62.5 billion of Tesla shares at their current price. That would imply, because we don't know the exact details, it would imply that Tesla would need to fall by about 80% before the margin call is triggered. So while it does increase risk for Tesla shareholders, I think it's a very small risk given how much collateral he has pledged.
Okay, Richard Windsor, thank you for joining us, the founder of Radio Free Mobile.
Pleasure.
While Richard thinks that this is a deal the board have to accept on Twitter, and indeed it seems they have done that. Thank you. Coming up, the PBOC pledges to boost support for China's economy. We're going to speak to George Magnus, Oxford China Centre Research Associate, this hour on the implications. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open, everyone. We are 16 minutes into the European trading day, and you can see we're seeing a nice lift off to a lot of these stocks. Europe's stock 600 gaining some 0.5%. Thank you, PBOC, for stepping in and giving that little bit of support. Yesterday, we started risk off, and then actually by the time the U.S. Closed yesterday, we were already seeing gains. Now let's get into the key market drivers with our markets editor, Christina Kino, and with Elise Badois, City Head of Equity Research in EMEA. So thank you both for joining us. Christine, China giving us the support, or certainly PBOC giving us the support that a lot of markets wanted.
Absolutely, Francine. And as you mentioned, we are seeing a bit of a lift that already started in the U.S. session yesterday. But, the Asian European session started very, very negative. They were still very much focused on the fact that generally the situation in China does seem to be deteriorating, both in terms of the lockdown COVID situation as well as the economic data front. And so, I really just have to wonder whether at this stage of the game, the PBOC and authorities pledging more support, is that really having the impact that they want, or is it acting more as a counterintuitive negative signal for investors and signaling to them that, wow, there really is something to be worried about in China if the authorities are responding this way? It could be at this stage, at this moment, but perhaps if we see more from the authorities moving forward from here, then perhaps it could shift to that fundamentally more positive change in terms of sentiment.
Elise, let's bring you in at this point. PBOC saying they're going to do more for the economy. Do you buy it? Are they going to step up?
Well, obviously, as they try to help, they're facing a particularly difficult local situation. And if I contrast that with our perspective in Europe, obviously there's a lot less that we can do. So obviously in Europe we have higher bond yields, we have crazy geopolitical backdrop, and we have downgrade to estimates coming through. So any piece of positive news is going to impact positively the European markets, and it is going to basically we're in a sort of range-bound market where it's buying the dips and essentially selling any form of rally. So I think this is why we're seeing this sort of positive outcome.
Elise, we're right in earnings season. I know Christine has a couple of thoughts on banks, but overall, what are you seeing? Is it holding strong? Is the worst to come?
So I think Q1 is always a funny one. Obviously, it's a quarter where you don't change your outlook typically. We've seen about 50 companies out of 400 reporting so far, and I think for the first time we're seeing the impact, obviously of very strong inflation, peak inflation as we are at the moment, following a very strong shock, supply chain shock post the war in Ukraine breaking out. So obviously, what we're seeing so far, you're seeing, for example, consumer staples, a typical sector I'd like to pick on as an example of what's going on. You've got sales beating up, driven by inflation, and then on the other side, you've got disappointment at the earnings level. And I think that Q1 is quite typical. However, as we head, into the rest of the year, what really matters is the earning downgrades and really what's priced in. As I say, we shouldn't just analyze companies. We really need to analyze share prices, and this is more than ever the focus at the moment. And the reality is a lot is priced in. I think we've looked at fund flows, and we've seen massive fund outflows out of equities, 37 billion out in Europe versus 13 at the worst case in 2020. So I think a lot is priced in. A lot of that bad news is priced in. So those earnings we're going to see in Q1, are just a small indication, and really what matters is H1.
Christine, on the earnings front, we're going to get some of the big tech names later this week out of the States, Alphabet, Amazon, and others, Meta, of course. Does the deal that we're still kind of getting our head around for Twitter, the $44 billion deal by Musk, does that lift the tech sector more broadly, or is this a very idiosyncratic Musk-Twitter story?
Well, Tom, I think it's the latter so far in terms of the investor reaction. I think investors are really viewing this as a singular Twitter story rather than a deal that could lift the tide for all of tech stocks. And, I think we're past peak tech in this sense, in that, just because there's potentially good news for one part of that sector doesn't necessarily translate to just generally better sentiment for the sector, especially because it is still facing multiple challenges, higher yields, tighter monetary policy, and investors just really kind of rethinking about those allocations to tech and thinking about putting those back into other assets, including bonds, which are now yielding more than inflation, or just about.
Okay, Christina Aquino on the singularity of the Twitter Musk deal and, of course, the implications of what we're seeing out of China. Elise Badoy, City Head of Equity Research in EMEA, stays with us. Coming up, HSBC first quarter earnings beat estimates. Don't miss our interview with the CFO, Ewan Stevenson. That is next. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front row, the best seats in the house for business's greatest minds.
We did take some additional provisions in the quarter against the balance sheet that we have there. We took around $250 million of additional provisions for Russia exposures, and we do think that that's a fairly complete provision for everything that we can see at the moment.
HSBC CFO there, Ewan Stevenson, speaking to us about the impact of the war in Ukraine after posting better than estimated earnings for the first quarter. Now let's take a closer look at the markets with Elise Badois, head of EMEA Equity Research at Citi. Elise, I am dying to talk to you about Twitter and Elon Musk, just because it's such a fun story, such a big story. I don't know whether it changes anything in terms of social media or your appetite for tech stocks here, or whether valuations are just too expensive right now.
Well, look, I think we're still overweight IT, definitely, globally. I think, obviously, as it comes to Europe, it's less of a component. But I think globally with IT, what we're seeing is as growth gets scarce, we will still have attraction for growth. And when you look at the P, obviously, it's the E that actually will triumph eventually. As, you know, if everything gets bad, let's say, put it this way, you know, the P goes down, but actually the E triumphs. And I think the growth that we might see from some of these IT names is attractive to us.
Elise, do defensive stocks, have they kind of run out of steam at this point? I'm thinking healthcare and utilities.
So we're still overweight healthcare. However, we're a lot more cautious on consumer staples, for example, and that's driven by inflation in parts, obviously. We can see the challenges. We can see the challenges as well. You know, when we think about inflation, we tend to forget the components of inflation and this idea that wage growth, for example, in Europe is not as strong as in the US. So really the driver in Europe of inflation is entirely commodity driven. So your disposable income is falling. So it means it's bad for staples, essentially, because the consumer end will not do well. In healthcare, we're actually fairly positive. We continue to see strengths there, so we remain positive. We see this Q1. We don't expect surprises, particularly negative surprises, and we expect earnings to be maintained there.
Okay, Elise Badois, Citi Head of Equity Research. The opportunities that you're seeing in healthcare still overweight there, but consumer staples avoiding for now. Thank you for those insights. Coming up, Chinese markets breathe a sigh of relief. Well, temporarily, they're back down lower at this point after the PBOC vows more support for the economy. We'll speak to George Magnus, Oxford China Centre Research Associate, next. This is Bloomberg.
that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Sealing the deal. Elon Musk wins Twitter for $44 billion. The tech giant's shares jump. European banks kick off the reporting season. We had HSBC and UBS both beating on profit despite the war in Ukraine. Now, more from our interviews with the Chief Financial Officer of HSBC and the Chief Executive of UBS this hour. Plus, to the rescue, the PBOC pledges to boost support for China's economy. We'll speak to George Magnus, Oxford China Center Research Associate, in just a moment. And Tom, I think the market are probably liking the fact that China had put some places or things in place to actually give credit. And there was, I guess, a worry in the market that meant that PBOC wouldn't fully step in.
Yeah, there was a cut to reserves of foreign FX for Chinese banks towards the end of the day yesterday. And then, of course, you had the turnaround in the US sentiment. And the PBOC, as you say, coming out with those comments saying, look, we're going to support the economy with additional measures. We're waiting, of course, to see what the concrete proposals are from the central bank. But so far, arguably, officials in China and Beijing have been reluctant to go full force to try and support this economy that, of course, is looking very fragile now for a whole slate of reasons. And front and center this week, of course, is that COVID-0 policy and the prospect potentially of lockdowns in China. You saw the markets closing lower on the mainland, so investors in the mainland not convinced that officials are really going to step up and support the economy. In terms of the read across to European markets, then 30 minutes into the session this Tuesday, you're seeing gains across the benchmark of 0.5%. Again, it was a solid end for Wall Street. Across your sectors too, that are in the red today, so a very different picture to what we saw yesterday. Travel and leisure and consumer. Travel and leisure down 0.4%, but you're seeing gains in food and beverage, telecoms, insurance and utilities as well, all up between 0.8% and 1%. We continue, of course, to watch what is happening when it comes to the central banks. Markets, just as a reminder, pricing in 4 50 basis point hikes from the Federal Reserve. We keep an eye on, of course, the ECB as well. And it's earnings season. 80% of those earnings stateside have so far beaten. We've got the big banks over Europe that have reported today, and we look ahead to tech earnings, notably the likes of Alphabet, Amazon and Meta later this week. But China is the centrality. It was certainly yesterday in that support from the central bank. The pledging by the PBOC to support the economy through targeted financing for small businesses. This is a repeat of lines we've heard from the Premier as well, Li Keqiang. It's also offering a quick resolution of the ongoing crackdown on technology firms in Beijing's latest bid to try and reassure the markets. Joining us now is George Magnus, author and economist, and a research associate at the Oxford University China Center, and of course someone who's been in the weeds on all things China for many a year. George, thank you for joining us. Do you think finally policymakers are having to square up to the economic realities on the ground in China, that they're going to have to pull out the big bazooka, or is it this targeted approach that they continue to use?
No, I think that still the sort of incremental approach actually seems to be the one that they're pursuing. I mean, so many people have been blindsided by the fact that, you know, everybody's expected since the beginning of the year that there would be more aggressive stimulus measures to boost the economy. And then, you know, in the face of subsequent developments, you know, not just the kind of COVID lockdowns, but also the consequences of the war in Ukraine. I mean, the economy has just become very enfeebled, but the authorities remain pretty hesitant to wield that big bazooka, as you say it. Obviously, they've cut reserve requirements for banks, targeted lending to small businesses, relief of mortgage payments for people in need, easing of housing restrictions. These kind of incremental things are, you know, measures which they've taken, but these are all likely to have very, very little kind of material impact on the ability of the economy to grow. If you lock down half the economy, you know, liquidity doesn't really help.
But George, I mean, they want, you know, and this is kind of the premise, a healthy and stable financial market. Will they manage, or could we see either a crash economy or something ugly on the markets?
Well, I don't know about crash economy. I think obviously there's a huge year. Every year is a huge year in China, but this year, of course, is the 20th Party Congress at the end of the year, where Xi Jinping, you know, expects coronation for, you know, forever. So, you know, stability was the watchword for the economy and for policy this year, but all they have at the moment is instability. And actually, though, it's been compounded by what we've seen during sort of March and April of pronounced increases in capital outflows, which have caused the yuan to weaken very sharply, as you know. And so I think they have to be really careful about what they do. And I think they are. You know, I don't think there's going to be a crash or anything like that, but there's no question that, you know, the Chinese economy in March, April, possibly May, depending on what happens in Beijing with lockdown, I mean, you know, could have a recession, you know, recession with Chinese characteristics, but one nevertheless.
A recession with Chinese characteristics. You talk about the outflows as well, and that, of course, is part of the mix. And you don't have to look back too far, 2 years or so, a year and a half, and we were talking about the record inflows that we were seeing, for example, into Chinese bonds. That, as you say, has reversed. Do you see it as a one-off, or is this more of a trend, George?
Well, it's too early to tell, as they say. I mean, it feels like it could be the beginning of a trend because, well, I mean, we're all operating on anecdote on this basis, but, you know, a lot of people that I speak to, you know, still with big sort of positions or businesses in China are kind of anxious that the politics of China's support for Russia is a game changer in terms of the way they see China as a sort of an investment in the future. Not to say that China is uninvestable at this point, but the regulations and laws that will force companies, including Wall Street, to choose between, you know, which laws and regulations to follow and which laws and regulations to flout. I mean, that is a problem that's going to get much, much bigger. And so, you know, I think that, you know, this kind of much sought after get back up, you know, the Chinese benchmarks for investment should be where Chinese share of world GDP is. I don't think that's ever going to be seen, to be honest.
George, do you think that these COVID lockdowns that really sent China's economy reeling will continue? Will they continue with their zero tolerance policy, or will they have to change?
Well, I mean, this is as much about politics as it is about public health, right? I mean, yes, a lot of it is about mRNA vaccines, which they haven't really developed yet at home. They won't import foreign vaccines. And it's partly about vaccination policies and so on. But the politics is also quite important. And it's too big an issue for Xi Jinping to walk away from or be defeated on. So my view is they will continue. I mean, obviously, as we speak, we know that Shanghai is in a lot of trouble. Beijing, mass testing has started in the most populous districts. There's a rush on food supplies in supermarkets and so on. People are expecting some sort of lockdown before long. The only caveat for Beijing is that since they've already had practice with the Winter Olympics in administration of, you know, running kind of zero COVID, it might be better than it has been in Shanghai. But there's no question that for the time being, the zero COVID will persist. And Xi Jinping has pretty much told us that it will.
George, what happened to the smart technocrats that once we could rely on? The Liu He's of the world, the vice premier of China, the leading advisor when it comes to finance and economics, and Yi Gang, the PBOC governor. Have they just been trumped by the ideology, by the politics? Once, not long ago, we could have kind of relied on them to put forward a policy mix that would kind of level the playing field and rewrite the ship.
Yeah, in a word, yes. I mean, since 2012, which is when Xi Jinping, came to power, I mean, there's been a sort of, we've now had kind of 10 years, really, of, it's been sort of going in fits and starts, but basically, the pragmatism for which the Communist Party, earned its plaudits over the last 20 or 30 years has pretty much gone out of the window in deference to, this kind of ideological lurch which has been championed and is being pursued by Xi Jinping. A lot of that is obviously we've seen during the last year or two in business with regards to the tech crackdown, the blizzard of regulation, the totally different kind of perspective which the policymakers have taken with regard to private firms. So, yeah, is the short answer to your question.
George, thank you so much. We'll get you back on also to talk about Twitter and China and Elon Musk. George Magnus, their author and economist and a research associate at the Oxford University China Center. Now, coming up, UBS leans on its investment bank to post better than expected profit in the first quarter. We'll talk about bankers' pay. Don't miss our interview with the Chief Executive Officer, Ralph Hammers. We'll cross live to Manus Cranny. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back to the Open. We are 42 minutes into your European trading day. You're seeing some gains of around 0.7%, so making up for some of the heavier losses we, of course, saw across the session yesterday. Future stateside, though, pointing lower by 0.4%. Every sector in Europe gaining, apart from two, travel and leisure, consumer products. Of course, we are focused on banks. Big day for earnings. UBS leaning on traders at its investment bank to post better than expected profit in the first quarter after its key wealth management business was hit by slowing client activity and rising rising costs. CEO Ralph Heimers spoke to Bloomberg's Manus Cranney about the bank's outlook.
Asian investors are more in a wait-and-see pattern, so you see transaction income down from a year ago. However, net new fee-generating assets still positive, also in Asia, so more money coming into mandates there. And then you see that in EMEA and Switzerland, you see a real pickup of demand in terms of investment, and also the US. So, indeed, you know, one region may be still muted from a transaction income perspective. However, money flowing in, even in that region.
The biggest threat, you know, you say it's an extraordinary quarter, and you name a lot of reasons. In your view, what is the biggest threat to the rest of the year?
Well, if you look at just to come back to this quarter, because the current circumstances have both challenges and opportunities, and that's what you saw this quarter as well. And I really want to make that point. The challenges are, okay, what is going to change tomorrow? The opportunity is, how are we going to help our clients with liquidity, with execution? That's how we delivered our best quarter ever in global markets, for example. That's the opportunity. The threat is, okay, is transaction revenues going down on the wealth management side? But we see more and more money still coming through. So our brand is out there as a beacon of stability. Our capital strength shows that clients have trust in us. So you see opportunities and threats. And with things being so unpredictable, you can only rely on what you're really strong at, which is your own advice and your own stability. And that's what we bring to our clients.
When I look at China, there's a sense of panic in the currency market. Growth levels are being stripped back aggressively. Do you see any material deleveraging or risk in your business in China and Asia?
Well, we have seen deleveraging in the last 3 quarters in Asia Pacific specifically. So yes, we saw that, and that is normal because on the back of a lower market, you also see deleveraging because generally the leverage that we provide is basically financing the position in the stock market. So if the stock market goes down, the leverage goes down as well. So it is almost a mutatis mutandis relationship there. So yes, we do see that. On the other side, we also see that investors, also in Asia, are looking at, recycling their risk. They are looking at managing their liquidity. So there's also opportunities there with a very strong investment banking quarter also in Asia.
Well, that was the UBS Chief Executive, Ralph Heimers, speaking to Bloomberg Daybreak Europe anchor Manus Cranney. Good title, Manus. When you look at, the Asia wealth business, that slowed. But actually, how much are they paying their bankers? This is, I don't think personnel costs have been so high.
Look, you know what? When I come back, when I'm reincarnated, I want to come back as a junior banker. I mean, this is the second pay rise they've had in as many months. It's literally flying high. I mean, to come into this business at this time, take me back to 1989, I say. I didn't get $100,000 in 1989. Well, maybe not quite. Look, they describe this quarter, I pontificate, as an extraordinary quarter, and they throw every reason in there, from war, COVID, China. I mean, literally, it's a smorgasbord of risk, but they're not full of fear. Muted business done by wealth management, but there's balances here. Leaning on the IB, which has got the flow show, nice set of flow coming through on the IB, that counterbalances the drop in transactions on wealth management down by 20%. The flow, as it were, within the IB counterbalances that, and there's new money to really get your teeth into, $19 billion. This is the best first quarter since 2007 for UBS. That gives you a sense of the underbelly, the underpinning of the wealth management business. If the alpha was buybacks the last time I sat down with Ralph Heimers, the risk is to the beta in the second half of the year from China and Ukraine, the second round effects.
Yeah, and Manus, on that, and of course you asked him about the Asia business, the wealth management business, you asked him about their exposure to China. I just wonder, having spoken to George Magnus earlier of Oxford, the concerns longer term about the investability of China, their exposure to that market, their determination to continue to pick up those billionaires as part of their wealth management business. How much concern did you pick up from Ralph Heimers about that business?
I think when you look at the 3 figureheads that we've spoken to today, Ewan Stevenson, full bull on China. Okay, that's natural. Himself and Noel have got to be full bull on China. Here we are with Hammers. He didn't seem overly concerned about a massive implosion in risk. He made a very sturdy case. You see a deleveraging when there is a de-risking in the equity market. That's where they do a great deal of the leverage. The question I have from wealth management, and as you well know, Tom, coming from that region, it's the face-to-face business. It's that business of trust and convincing a ultra-high net worth billionaire to actually go to unquoted markets or to take a twist in risk.
Okay, Bloomberg's Daybreak Europe anchor, Manas Krani, of course, with that important interview from the UBS CEO and potentially his reincarnation as a junior banker. Coming up, it is official. Elon Musk has agreed to buy Twitter for $44 billion US. We look at what it means for Tesla.
He's never going to be banned.
He's never going to be banned from his own platform.
He's in charge. Cannot be banned.
What does it mean for Tesla? We're going to dig into that story next. This is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 51 minutes into the European trading day. You can see still support for these European stocks. They seem to like what PBOC is saying, which is they'll support the Chinese economy. Then we have earnings, and we had, for example, UBS beating estimates. Now let's get more on the Twitter deal. Tom and I obsessed with Twitter. Tesla shares falling late yesterday following news that Chief Executive Elon Musk is buying Twitter in a $44 billion deal. Now, what does it all mean for the electric car maker? Tom, even more obsessed than me about this angle. So joining us now is Bloomberg's global card czar. He's Craig Trudell. Craig, we joke around and saying, look, what will he do? But this is actually quite a big financial strain. I don't know if you'd qualify it as big, but certainly a strain on Tesla because there's a margin loan tied to Tesla, and he may have to sell some shares.
Right. There's I think the real big breakthrough in this deal was last week, right, when when Elon Musk, essentially said funding secured, but did so in detail with a lot of information about about how he's going to finance this deal. It's going to take tens of billions of dollars worth of Tesla stock that he's going to essentially borrow against as collateral that, obviously sort of levers him up and exposes Tesla to some risk. There's also an open question of, where the equity portion of his financing is going to come from. Is he going to sell more Tesla stock? And we saw him sell off quite a bit of shares late last year. So kind of a question as to whether or not, in doing this, is Musk kind of calling a top for Tesla shares?
And then there's the branding and marketing question, quite frankly, when it comes to Tesla and the overflow or the overlap with Twitter. And just on one, it was interesting to see Dogecoin, of course, Musk's arguably his favorite crypto, soaring yesterday as Bitcoin and the rest just dropped for other reasons. But they were betting, of course, Dogecoin investors were betting that he was going to start pumping and promoting the crypto again on Twitter. What does it mean? How has he managed to leverage Twitter already before this to build that brand?
It's been amazing. I mean, Tesla does not do traditional advertising, right? It's literally an immaterial amount in their regulatory filings, where the automakers that Tesla has been taking on spend billions of dollars per year on advertising. So for Elon to have sort of mastered this platform and really turned it into a primary means for his way of promoting not only himself but Tesla. The amount of super fans on there, the amount of news coverage he's able to generate, his ability to kind of, decide where the news cycles are going to go and sort of set the tone for things. He absolutely has used Twitter to an incredible extent to sort of, promote Tesla. And I suppose you could say, there was a real risk the way he carries himself at times on there. If he were to be treated like Donald Trump at some point and either suspended or taken down, how much of a risk was that for him? And perhaps that informs why his view here is, free speech is utmost importance.
Yeah, but if he's unbannable, then I don't know, you're a regulator, you kind of look at this and you say, wait, you can't, we need to, or somebody needs to have the power to ban him if he goes too far. What does this mean for the auto world in general?
Well, it's interesting. Henrik Fisker, who is trying to start his own electric vehicle company, sort of Take Two for him, has already taken his account down. It's going to be really interesting to see how, Jim Farley at Ford has built more of a presence on there. Mary Barra is on there. Herbert Diess of Volkswagen, actually, he and Elon were exchanging pleasantries just last week, so maybe he'll stick around. Yeah,
I didn't know he was on Twitter.
So a real question as to just how much some of these executives in the same industry are going to stick around. We've already seen one decide to head for the exits.
Wait, Herbert with memes?
Yes.
Memes? He has memes? Okay.
I know. Is this just Musk trolling his competitors? I like that. He's just buying it just so he can troll everyone. Do I pull myself off as a competitor? Do I stay on?
Diess by no means has quite gotten into the meme game, but he at least did succeed around this time last year, generating a lot of interest in Volkswagen's electrification plans by being a little bit more active on social media. So we're seeing the rest of the auto industry at least creep toward following the Musk script.
I mean, I can't wait for a Diess meme.
That's what we're waiting for. That's the next thing. The Diess meme. See what it does to the price.
And then we know the world will have gone completely mad.
Yeah, that will be the tester, the litmus test. Craig Trudell, as ever, our Qatar, walking us through the implications for Tesla as a result of Musk's purchase. It looks like the deal, of course, for Twitter. Francine.
Now, that's it for the European Market Open. Surveillance Early Edition is up next. A lot of the focus, of course, on the markets is what in PBOC has said they will do. I don't know whether that means that we'll have a worse than expected economy in China, which is why they have to do more, or they're going to have to follow through.
They're going to have to follow through
in their stride.
Yeah. Plenty more coming up. Stay with us. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The biggest second round effect will continue to be a pressure on commodity prices.
We took around $250 million of additional provisions for Russia exposures.
I'm excited to see what he's going to do with the company when it is private.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Sealing the deal, Elon Musk wins Twitter for $44 billion. The tech giant's shares jump. European banks kick off the reporting season. HSBC and UBS both beat on profit despite the war in Ukraine. More from our interviews with the chief financial officer of HSBC and the chief executive of UBS this hour. Plus, to the rescue, the PBOC pledges to boost support for China's economy as virus testing is expanded to most of Beijing. Now, let's check in on the markets first, and really the markets kind of distill all of these tensions or actually support from PBOC. You can see we're seeing a nice little lift for the European stock 600, gaining some 0.7%. Technology also gaining 0.6%. Look, a lot of these European equities, first, it is earnings season, and we have a lot of stocks that actually beat estimates, but also they rebounded from a 6-week low, again, as risk appetite has returned after China's central bank pledged to support the economy. Our Tom McKenzie was reminding everyone, once they've said it, then they need to follow through. Bitcoin, 40,060, and then the U.S. dollar index, the one thing that we've been watching incessantly to give us a good idea of also U.S. financial conditions. Mark Cudmore with a great chart earlier, actually, looking at the financial conditions in the U.S. and how they differ from the ones in China. Now, this is a picture overall. If you look at the individual European countries, again, we look at oil. We always look at oil to give us a sense of how much independence a lot of these countries can actually achieve from Russia if there was to be an oil embargo. Overall, though, we're seeing similar gains across the board. I'm looking at the sectors, and all of them are up. You can see the FTSE gaining some 0.7%, the DAX almost 1% higher, and the CAC 40 and the FTSE MIB over in Italy 0.5% higher. Now, Elon Musk agreeing to buy Twitter for $44 billion. Now, it will be one of the biggest leverage buyout deals in history to take the 16-year-old social networking platform private. Joining us now is Bloomberg's Laura Wright. So, Laura, this has been, of course, talked about for a long time. $44 billion. Why is the board finally behind them?
The board's behind it, Francine, because of the magic number, $54.20. That's what shareholders will receive. And look, that represents a 38% premium from the social media platform's closing price on April the 1st, the last session before we learned that Elon Musk had become the company's largest shareholder. Now, Elon, he submitted that unsolicited original bid back on April the 14th. The board initially implemented some defensive measures, but then last Thursday, they had to take him seriously when in an SEC filing, it became clear that he had the funding in place, $46.5 billion, a mixture of investment banks and a $21 billion equity commitment from Elon himself. Now, his motivations are quite complex. He likes free speech, and he sees that as a fundamental pillar of democracy. He's critical of censorship on the platform. He likes it to be polarizing. He's a polarizing character himself. And most simply, Francine, he wants to restore Twitter to its former glory. He has criticized accounts such as Barack Obama, who tweets infrequently, spam bots, accounts without proven identities behind them. He's emphatically against those. But all in all, Francine, it comes down to the fact that Elon Musk is a pragmatist. He already has over 80 million followers on the platform. And even though he has touted launching his own social media platform, perhaps he was dissuaded by former President Donald Trump's trust and thought it was a better option to simply take Twitter private.
All right, interesting. Laura, thanks so much. Laura right there with the very latest on Twitter. Now, for more on this developing story, let's bring in Bloomberg Quick Takes Alex Webb for more details on Twitter and Bloomberg's auto czar Craig Trudell for the impact on Tesla. So thank you both for joining us. Alex, he's done it, $44 billion. Are we going to see Trump back? How will Twitter actually change?
It certainly looks from the tenor of his conversation that that is something that would happen. If he's in favor of free speech, maybe he does bring Trump back. The thing that's kind of curious, though, is he probably has a limited window to do exactly what he wants because we are seeing regulations come in. Just last week, we saw some agreements in Europe about at a European level that there are going to be regulations which sort of control the sort of stuff you're allowed to post on social media. Similar stuff is in the works in the US. So absolute free speech is only to a certain extent within his power.
Yeah, I mean, the other thing is that actually the way he financed the deal, first of all, it was impossible for the board to refuse it just because they were getting so much money. The fiduciary interest means that they had to say yes, but he's financing it through Tesla. Is this bad news for Tesla?
It at least seems to be the case that, since his stake emerged, Tesla shares are down about 8%. So not by any means a sort of five-alarm fire, but we have seen the stock sort of soften a bit, even just in the last few days once it was clearer that he had some semblance of financing. But there is real risk in the idea that he's essentially borrowing against quite a lot of Tesla shares, so he's kind of levering up for this. The other question is how much stock he might have to sell to finance the equity portion, and whether or not he's able to sort of do what he wasn't able to do, what he tried with Tesla. He was trying to get public shareholders to sort of roll into the private company. If he can do that, maybe there's less financing that he needs equity-wise.
Great. Is this a vanity project? So he's probably not going to make money out of this, but is it a vanity project for him, or is it actually good for Tesla because it means that it's free advertising, and what do the rivals do?
It's interesting because he has said, clear-cut, I don't care about the sort of economics of this deal, and he is not, he's sort of said he doesn't particularly care about Twitter making money, but certainly he's turned this into an incredibly valuable asset for Tesla in the sense that he's, used the platform to promote the company in a much cheaper way than we've seen auto companies spend, billions of dollars a year, advertising their models. He just does it all on Twitter, and it works out pretty nicely for him.
So, I mean, some people this morning have also funnily tweeted that they don't want to be part of this anymore because it could turn ugly. I mean, some of the things that he himself has posted, put some people off because of, the memes. Is there another social platform that people can go to? No.
Not really. We've seen this with Facebook over the years, that at various stages people get upset with Facebook and say, delete Facebook, quit Facebook. There's a mild outflow, but it's a tiny percentage. It's barely even a rounding error. It's worth remembering, of course, Twitter is a lot smaller than Facebook because it's got around 200 million active users. Facebook across, or Meta across its various different products, has close to 2 billion. I think, the product thing, one thing that is significant and people are maybe misconstruing is when it comes to verifying accounts, and that's, Elon says about cracking down on spam bots. It's also really important for advertising because, if you can verify someone's profile, you know who is behind that profile, it is far easier to target adverts at them. And so there is a reason why some people don't like to verify their profiles, not just because they have, mendacious target or reasons for being on the platform, but also they don't want people to be able to tie up their ID with their Twitter and their Facebook and all their debt records and all these sort of things. That's the reason why people don't like it.
Craig, he also wanted this so badly. Is there a danger that he focuses on this for 80% of the time and actually, loses a bit of focus for Tesla?
That's a real concern too. I mean, obviously he's proven he has a track record of being able to multitask, not only, running Tesla and SpaceX, but digging tunnels with Boring Company and, working on brain implants with Neuralink. But there is a sort of question, right, of, is there a line at some point? Has he put too much on his plate? And, Tesla has proven it's been able to execute quite well the last few years, even with his sort of divided attention. But there's a question of, what happens if something goes awry with Tesla and his eye is essentially off the ball?
Could anyone ban him if he went too far in tweeting?
Well, that's why it's interesting to see what regulations come out, right? Because, the SEC has only had limited success, but if it falls within the remit of someone else, it falls within the remit of the FCC, or rules come in at the US level which stipulate this is the sort of thing you can or can't post, then it's not going to be in his control necessarily.
All right. Thank you both for joining us. Alex Webb there from Bloomberg Quick Take and Bloomberg's Kartzar. He's Craig Trudell. Now, coming up, more from our conversation with the UBS Chief Executive, Ralph Hammers, as the Swiss bank rides a trading boom. And they're also paying their bankers quite a lot. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The biggest second-round effect will continue to be a pressure on commodity prices, which will cause further inflation pressure, which may cause further need for central banks to curb that inflation in order to manage either stagflation or possible even a recession.
Well, that was the UBS Chief Executive, Ralph Hammers. We'll hear more from our interview a little bit later this hour. Now, let's discuss the latest market actions. Well, with us is Agnes Belesh. She is Chief European Strategist at Barings, and also joining us, Christina Kino, Bloomberg's Markets Editor. So thank you both for joining us. First, PBOC, Christine, stepping in. All is good. They'll support the economy. Can markets actually go on a downturn tomorrow?
Well, Francine, it really depends on how they interpret these latest actions, right? I think the intended effect for the PBOC is that market sentiment improves as a result of their actions, and investors feel safe enough to dip their toes back in. But I don't think investors are feeling exactly that. I think they're feeling exactly the opposite of that at the moment. They are really, really worried about what's going on in a macro picture in China, because we're not just talking about an economic slowdown and a little bit more negative economic data, but we're also talking about this widespread lockdown that could potentially have longer term effects and feed back into that data front that is already negative. And so I think at the moment, investors wondering how long this is going to last and whether the support will continue. I think at some point it will turn and they'll realize that the authorities are here to stay and keep supporting, but I don't think we're there yet.
Agnes, how much do you worry about earnings, and how much do you worry actually about something going awry in China?
Yes, hello, good morning. It was always going to be impossible for China to leapfrog this pandemic and seal up its economy and then reappear on the other side intact. So in fact, I think in the short term, you're right, this will have an impact on earnings. I must say as well that during the pandemic, dependence on China came down simply because China was exporting more than it was importing. This dual circulation and common prosperity with a new rebalancing towards consumption actually was delayed simply because everybody was locked in and there was no spending going on, and exports were necessary for medical equipment and other cheap things that were needed in other advanced economies. So actually the world is depending a little bit less on China right now in the past 2 years, but for sure the idea that China, the global engine of growth of the world, is not going to be as strong as necessary as the rest of the world reopens is not nice. Nonetheless, we have to know that, like in the rest of the world, China will reopen, people will get vaccinated, and there will be a boost to growth later down the road.
Agnes, one of the other things that we're trying to figure out is, of course, when we'll see peak in U.S. 10-year yields. Is it this year? When does it happen? And what does it mean for the market you're watching?
Yeah, so I think this is the big question of the day, which is how are central banks thinking about it really? And are they really ready to engineer a recession just to kill inflation? And I think central banks are actually thinking about this quite differently from what markets are thinking. They know, maybe the Fed is completely different in that respect from the ECB, but they sort of know that this is a supply shock, and it feeds into a much bigger change in the world order with a sort of deglobalization or relocation of supply chains closer and this green transition. So the shock to supply, to commodities, to materials, to metals is going to last for longer. So there's nothing they can do against this. In fact, you could think that central banks would welcome prices to go up as an adjuster to supply, so that more supply is incentivized to come up online. Otherwise, there's no solution to this. And it's not by reducing demand through a recession that anything of this will be resolved. But I think they're walking this thin line where they're trying to anchor inflation expectations and to speak tough and they walk the walk, but they will, and they talk the talk, but they will walk a little bit of the walk, not the full way. And so whatever is priced in right now is very unlikely to happen.
Christine, talk to us also about the banks. So we had earnings. Are they symptomatic of a wider picture for earnings overall in Europe?
Well, it is going to be interesting, Francine. I know that it is largely a positive first quarter for a lot of banks, and partly why European stocks, I think, are up today, because, of course, it is a bank-heavy region. Some of the key takeaways, very, very interesting. Obviously, the trading volatility and just a tumultuous quarter for markets in several measures, proving very well for banks. It was definitely a big boon
boon for them in terms of just the amount of money changing hands and what that does to trading revenues. But then some of the more negative takeaways that I found, of course, some warnings on China and how that's going to affect a business moving forward. Of course, China, a very big market for a lot of these major banks. And I think also the idea of how much is already priced in. I think one of our guests earlier was talking about this idea of how much is priced into bank price shares at the moment, and whether this idea of higher rates, which is accepted as a particularly great headwind for banks, is that already priced in, and have we seen the best of the move now that it's all kind of nearly behind us, even if the actual rate hikes are still coming?
Agnes, what are you expecting from the ECB? And given some of the supply constraints and some of the supply chain issues, how do they walk that line?
So the ECB is, and it's interesting to say, is in a much easier situation than the Fed. There's no wage growth, and whatever demand there is not driven by credit. So the ECB doesn't have to cool off an overheating economy. In fact, the ECB is being helped by higher prices and the war in Ukraine, of course, and the higher cost of energy, which will by itself reduce demand. So the ECB, I think, wants to raise rates to zero. It would be just a nice thing to have, to be sort of a normalization. But I don't think the ECB is thinking of going much further than that. And in fact, we know that it is readying any other tool it might need to restart asset purchases if things go wrong.
Thank you both for joining us. Agnes Belash, their Chief European Strategist at Barings, and Christina Aquino, our markets that are turned. Now, we're also getting a pre-market check on Twitter, the story in corporate news, without a doubt. So let's have a look if they're there. You can see pre-market, they're not moving by that much because they had actually a huge upswing yesterday. Coming up, Chinese markets breathe a sigh of relief after PBOC vows more support for the economy. We'll talk China next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
We did take some additional provisions in the quarter against the balance sheet that we had there. We took around $250 million of additional provisions for Russia exposures, and we do think that that's a fairly complete provision for everything that we can see at the moment. I think we're continuing with our long-term plans to grow our wealth franchise there. We see no reason to slow it down, despite some short-term dislocation because of the Omicron variant. But overall, we remain big China bulls. And when we talk about a China slowdown, we're still expecting to see growth rates of around 5% this year and next year, which is still very healthy compared to expectations in the West.
Basically, you booked $1.3 billion worth of Russia.
Well, that was the HSBC CFO, Ewan Stevenson, talking about the company's China company business after their first quarter earnings beat estimates. We'll share tradings lower this morning. Now, China's central bank has also pledged to support the economy through targeted financial for small businesses. It's also offering a quick resolution of the ongoing crackdown on technology firms in Beijing's latest bid to reassure the markets. Well, joining us now is Bloomberg's Asian health reporter, Rachel Chang. Rachel, good morning or good afternoon to you. Will Beijing go into lockdown like Shanghai?
Hi, good afternoon. Yeah, I mean, that is the biggest question I think markets are watching this week. The situation in Beijing, not a lot of cases, only about 20 cases a day. But we do know that what the Chinese government has taken away from the crisis in Shanghai, which has become such an embarrassing, global headline type of story, what their takeaway is not that COVID zero doesn't work. It's that they need to do COVID zero even harder, even stronger, even earlier in an outbreak. So you see Shenzhen, for example, they locked down over 80 cases, and that was done in a week. So it's highly possible that Beijing will go this way. However, it is the most important city in China. It's extremely politically important. All the elites are there. So it will be a massive loss of face as well to lock down Beijing.
Rachel, why is China still doing the COVID zero strategy?
I think that is a question that the global markets are asking. But what we do know is that for President Xi Jinping, COVID zero is now an ideology. It goes beyond economic growth. It goes beyond other sorts of priorities that the government has. And we do know that China is right now politically waiting for the Party Congress in November, which is when Xi Jinping will try to get what we think will be a third term, potentially indefinitely as well. And we know about this political structure that they have, that stability and calm, no massive changes, no U-turns before these sorts of big political moments are essential for their structure. So that is why investors and analysts don't expect to see any change this year.
Rachel, what exactly, once PBOC does what they've promised, is there anything more that they can do?
I think there is a lot more that they can do. I mean, the problem is whether or not markets really believe that, what their stimulus and what their support will do will help or will stem the damage that the overall virus policy will infringe on China. And the problem is nobody really knows how bad this can get. We know that China is such an important part of the world economy. The global supply chain relies so much on it. Even lockdowns in smaller places, for example, Inner Mongolia, that's a rare earth production hub. So we really don't know how far that damage can be, and that is why markets so far have pretty much shrugged off the sort of promises and the pledges from the Chinese central bank to support the economy.
All right, Rachel, thanks so much. Rachel Chang there with a great update, of course, on China. Coming up, Lavrov's warning. Russia's foreign minister says there's a serious danger of nuclear conflict. We'll dig into all of the latest on Ukraine next. This is Bloomberg.
prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Sealing the deal, Elon Musk wins Twitter for $44 billion while the tech giant's shares jump. European banks kick off the reporting season. HSBC and UBS beat on profit despite the war in Ukraine. Plus, to the rescue, the PBOC pledges to boost support for China's economy as virus testing is expanded to most of Beijing. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, first thing is first, let's get onto the markets because they seem to like what we heard from PBOC, that they will stand firm and they want calm markets. So actually, just the fact that PBOC has promised that, they haven't intervened yet, but we saw a big reversal when it comes to these European stocks. Yesterday they were down, and today we're seeing a risk-on mood. In fact, European stocks are rising from a 6-week low after China's central bank pledged to support the economy. We also have a lot of earnings that came in better than expected. I have to say, yesterday there was risk appetite being weighed by concerns over a more aggressive U.S. Federal Reserve rate outlook and the spread of COVID-19 in China. So once again, just a reminder that things on the markets can turn pretty quickly both ways. Now let's get the latest on the war in Ukraine. And the Russian Foreign Minister Sergei Lavrov has warned there's a serious danger of nuclear conflict. Now it comes as U.S. Defense Secretary Lloyd Austin said Washington's goal was to see Moscow weakened so it cannot attempt a repeat of the war. Well, joining us now is Tim Adams. He's Chief Executive Officer of the Institute of International Finance. Tim, as always, thank you so much. So nice to speak to you in the studio.
Good to see you, Francine. Great. Thanks for having me back.
Yeah, it's nice to have you back in London. So I'm not going to ask you about nuclear war because, of course, you can't price that and you have no idea what it means for banks. But we're still looking at sanctions. These sanctions could be increased. We could see an oil embargo.
Right.
How are banks doing?
Banks are doing well. You know, we've been watching this crisis pretty closely. They're in constant contact. I saw HSBC, Santander, and UBS this morning. Good news.
Yeah.
Ralph Hammers did a nice job. Anna Botín does a nice job as well. And there's something to be said for large, diversified institutions, right? But obviously, we're watching Ukraine, the potential spillover effect. I think more sanctions are coming. I think oil and gas are going to be central to that. We just don't know the details yet.
Tim, do you have a good reading of actually how difficult it has been for these banks to look at sanctions, but also to understand? I was having a conversation actually with a senior banker who was saying, you know, you can't sanction someone just because of a nationality, and sometimes they have a holdings where they don't exactly know where the money is.
No, that's correct. This is incredibly complex. There's so many shell companies around the world. There's issues of beneficial ownership. We're not actually sure who actually owns some of these assets or where they're located. So kudos actually to the U.S. and the U.K. and to EU to search for and identify these assets. And, you know, the sanctions riders are working overtime, and we're scrambling to keep up.
Is there any, I don't know if something that you look at, we heard from the ECB a couple of weeks ago that actually cryptocurrency, in certain cases, has been, could have been used, but then there was also pushback against that actually that's not really the case because it could be, a common person doing that transaction.
It's not really the case, and it actually is being used for humanitarian purposes in Ukraine.
As well,
but there's just not the liquidity, and we just haven't seen it. We actually, there is the capacity to peer into a lot of this transactions, and I don't think it's being used to subvert sanctions.
Tim, overall, what are your bank's members worried about? So, we had a stellar performance, especially during the pandemic, from a lot of the Wall Street banks. Now they're kind of regrouping. They're not doing as bad, but it's not the stellar returns that we saw back then. Are investors now too used to that?
Well, we're getting costs under control. Look, there's a lot of technology spend out there. You see JPM spending $15 billion a year. You got cyber resiliency, which is important. You got technology spend just to continue to offer the kinds of products and services that consumers want. So it's really getting expenditures under control and really dealing with the rising rate environment. Not a surprise, but there's a huge dispersion of rate trajectories around the world.
Yeah, not a surprise, but sometimes it feels like it is a surprise to the markets.
Right.
Is it because we haven't really quite figured out? I mean, we haven't really been in an inflationary environment for, what, 2 decades?
Right. Right. If you walk around the trading floors of a lot of these places, most of those people on the trading floors have never seen an inflationary environment like this. So it's really new for people, and we've forgotten it. I lived through the 70s. I remember what it looks like. A lot of people haven't.
Yeah, I mean, I felt very rich as a child because I'm Italian, and we had the lira that, it was like 10,000 liras was worth like $1 or something at the time. So I've also lived through inflation. Is there a risk of policy mistake? And what do big chief executives can do to actually protect themselves against some kind of monetary policy mistake?
Sure, I think there's a concern about a hard landing in the United States. How fast and how furious will Jay Powell be? He indicated last week they're going to move quickly. Pulling this off with a soft landing will be hard. Not impossible, but hard. ECB is somewhere else. Obviously, there's enormous uncertainty with the periphery of Europe and what European growth is going to look like.
And what does these banks look like in terms of GVs with China? We heard, again, even if you look at UBS, which you were just talking about, the wealth management business in Asia has been underperforming.
Yeah, it was. I think you heard HSBC this morning. Their medium long-term view is still very bullish. The short term, there's so much uncertainty coming out of China. Still a COVID lockdown. There's still the issues of monetary policy. What exactly is the PBOC going to do? You've got issues of technology policy, real estate. So, it's a big year for China, but I don't think we're going to see much on the upside this year.
And so it doesn't mean, are your members looking at doing more business in China? Do they approach it much more cautiously? Also because we don't really know the relationship between Russia and China at the moment.
Sure, you can't afford not to be there, and they've invested decades of showing up and investing and building their business. Brands and the market share is still pretty small. You heard that on HSBC this morning. But I think there's still ambitions to do more. There's a huge market. You just have to take a long-term view and be cautious.
I always enjoy our conversations because it's also a good idea to take stock on where we are in terms of some of these, the financial sector as a whole. How do you think the pandemic has changed them? So we're looking at maybe working from home more. I know you're here in London. You also spoke on an ESG panel. Is that taking a back step?
Well, it's still important, but obviously the daily headlines have eclipsed the issues of climate, but still important. I was just in New York last week, and you're hearing from at least the New York firms an effort to really get their workers back. But there's a resistance among Gen Zers and others. They want to work from home, or they want to much more liberalize the working conditions. So we just need to find a balance.
Tim, we're just getting some breaking news, and actually I'd quite like to get your thought on this. This is the SEC Chief Gary Gensler wanting to slash the amount of time that traders have to report many bond transactions as part of a bid to increase visibility into fixed income markets. So this just breaking on the Bloomberg terminal. I think he's actually delivering these remarks at the same event that you were. This is like City Week, so it's almost like we planned this. I mean, this is a pretty big, market-moving event, the fact that he's slashing bond trading reporting time to 1 minute. Are we going to see a lot more transparency for some of these transactions?
I think you're going to see a lot more from Gary Gensler. He's very ambitious, he's very smart, and he's determined that the SEC is going to be a leading policymaker in Washington. And I think that's why you're seeing other agencies scrambling to keep up with Gary.
So, other potential measures, and he's also weighed in on cryptocurrencies, like other potential measures, and this is something that we were talking about a little bit earlier. Some of these potential measures to boost transparency could include making public trace data on individual treasury transactions. This is something that he's reported in the past, but also looking at some of the trading protocols and fees paid for a transaction. I mean, is this an earthquake, actually, for your industry if he gets his way?
Well, I haven't seen the details, so I don't want to speculate. But he certainly has made transparency and disclosure an important part of an anchor of his leadership, and I think we're going to see more of that. Obviously, with respect to climate disclosure, there's the issue of the SEC versus the new ISSB. So Gary's aggressive, very smart, and is going to be a part of the policy discussion for the foreseeable future.
In terms of ESG disclosures, are we going to have a common ground worldwide? And if we don't, how difficult is it actually going to be for investors to make up their mind on where they put their money?
That would be ideal, but no, we're not going to have a common ground. Right now, we have 24 different taxonomy regimes around the world. We don't need 24. We need at least 2 or 3, ideally 1. We're not going to get there. It will be the SEC versus the ISSB on things like materiality.
Tim, thank you so much. Tim Adams, there, the Chief Executive of the Institute of International Finance. Also commenting on that breaking news just moments ago, the SEC Chief, Gary Gensler, saying that he is looking at slashing bond trading reporting time to 1 minute. This is huge for Wall Street. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. China's expanding its COVID-19 testing to most of Beijing, raising fears for an unprecedented lockdown in the city. Nearly 20 million people will undergo 3 rounds of COVID testing over the next week or so. The expanded program is causing jitters in the capital about further restrictions. Currently, more than 50 million people in China are under lockdown. Now, President Joe Biden has named career diplomat Bridget Brink to be his new ambassador to Ukraine as the U.S. ramps up its military aid and diplomatic presence in the country. Russian Foreign Minister Sergei Lavrov, meanwhile, told local TV there is a serious danger of nuclear conflict, which should not be underestimated. Moscow's attacks have continued on a steel plant in the port city of Mariupol, where some 2,000 Ukrainian fighters are currently holding out. Sweden and Finland are reported to have agreed to seek entry into NATO in mid-May. According to media reports in both countries, the 2 governments plan to publish their applications to join the defense bloc. At the same time, Russia's attack on Ukraine has led to a radical rethinking of the security environment in both of those countries. And a new study says Brexit caused UK imports from the European Union to collapse and led many small British firms to give up exporting to the EU altogether. After analysing the first year of the new trade deal, researchers from the London School of Economics found the value of imports from the bloc fell by 25% relative to imports from the rest of the world. The number of British export relationships with EU companies dropped by 30%. The study stripped out distortions caused by COVID. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Coming up, it's official. Elon Musk has agreed to buy Twitter for $44 billion. The world's richest man will soon be in charge of one of the most influential social networks in the world. We'll bring you all the details next, and this is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's turn back our attention to our top story. A month ago, Elon Musk's main connection to the social media platform Twitter was as a prolific user. From there, he outed himself as Twitter's largest shareholder before becoming a short-lived prospective board member, a hostile suitor, and finally a successful deal maker, tweeting dozens of times along the way. Well, joining us now is Hussein Kanji, his partner at Hoxton Ventures. Hussein, we're a little bit obsessed with this story because we don't know how exactly what this means for Tesla, how he funds it. We know how he funds it, but this margin loan, what it means, but also what does Twitter become?
I mean, that's the big, I think, open kind of multi-million-dollar question now that he's buying the thing. No one really knows what he's going to do with it. I think, there's not much to lose as a company from a Twitter perspective because it's got to change. When you compare it against its peers in other advertising-oriented businesses, Twitter brings home about $5 billion of revenue. Facebook brings in about $117 billion of revenue. Google brings in $257 billion of revenue. So there's quite a bit of a difference between Twitter's audience and Google and Facebook's audience, which translates directly into the revenue side. This probably is the biggest thing to change, but the question is how and when and the mechanics. No one really knows.
What do you think, Hussein? I mean, do you think he wants to make money out of this? He's saying he's not, but what is this, advertising? And I guess, is there a danger that regulators, step in? Because at the moment, if he's in charge, then he can't even ban himself no matter what he says on the platform.
Yeah, I mean, I think this is almost as much about free speech and about a platform for Elon, but I think he's a good businessman. So I think this is about turning this into a more valuable business. There are a bunch of ideas that have been floated around the internet on this. One of them is to split the Twitter business into two things. One of them is the social graph or the user graph, the actual core content. And the other one is the advertising business. And by doing that, you might be able to innovate a little bit easier. One of the challenges of being a public company is you're very much in the limelight of your public market investors, and you have to deliver quarter on quarter. If you're a private company, you might be able to experiment. There is an argument that Twitter may have gone public a little bit too soon, and it should have actually experimented a little bit more. And, the public markets don't give the Twitter management team a very long leash to actually experiment. A privatized Twitter could actually go off and experiment.
But Hussein, what kind of experiments would you put in place? I mean, we sat down and you said, look, it's not doing as well as some of the other social media platforms, but it's a different proposition. It doesn't speak to the same kind, I guess. It's just not the same way of sharing that you do on other platforms.
Yeah, so one of the big ideas that's been floated around on the internet by a fellow named Ben Thompson, who runs a firm called Strategery, is you split it up and you open up the Twitter client base. So back in 2013, Twitter famously shut down most of the clients that were out there. So you could access Twitter via other companies other than Twitter. And there was quite a bit of innovation as to how you actually present the information, how you consume it. The graph stayed the same, but the client basically changed. Twitter shut all of that down because there was another fellow, Bill Groth, who tried to make a run on Twitter by buying up all the Twitter clients and then effectively trying to control Twitter. There's been a bit of stagnation in kind of how you use Twitter. It's kind of been the same ever since, for the last 10 years. And there's probably a little bit more innovation that you can have. Again, the challenge for that is that's probably not going to drive any short-term revenue. And it means you probably need to be a private market company to figure that stuff out.
But you also need to be very controversial, which Elon Musk is no stranger to be able to attract new consumers to the platform. And then will the regulators crack down on that?
Yeah, so I think if you're talking about just the content that people are producing, yeah, I mean, I think that the more audacious the content is, I think the more of a following, there's a lot of readers, right? So it's almost like the Daily Mail problem. If you publish things that are outrageous, you get a much bigger audience, and the Daily Mail is one of the largest media companies for that reason, and that will certainly invite the regulators. But I'm just thinking more from a technology and business perspective. Even if you have an audience of people who say salacious things on Twitter, turning this into a good business and turning this into a more vibrant business is very much of an open question. I mean, all of us in media, I think, use Twitter very actively, but the mainstream doesn't really use the service nearly as much. I mean, Donald Trump kind of maybe made it famous by being a president who tweeted, but the average person probably doesn't log on to Twitter, and I think those numbers are very much reflected in the advertising revenues that you see for the companies.
Salacious is such a good word, Hussein. Talk to me a little bit about the repercussions this has on Tesla. So there's a big margin loan also attached to Tesla. So if there's a breach of the covenants of the loan, actually you sell off Tesla shares. Is this a concern? Tesla is a huge, also other tech company.
Yeah, a huge company, also very highly valued, and I think Elon is effectively borrowing with the wealth from that he's created from Tesla. But Tesla itself is a pretty highly valued company. I assume that the Morgan Stanley advisors who've been advising him have figured out how to be able to structure this so that he's not in any kind of personal liability or doesn't put Tesla into any jeopardy. But there's so many questions with this acquisition, right? Even the poison pill, which Twitter put up, it's very strange for a company that says I don't want to be acquired a week later or less than a week later concede and say, yeah, we're very happy with the acquisition. There's so many questions with this transaction, like why does he want it? What's he going to do with it? How's he going to finance it? And why did the Twitter team all of a sudden change its mind so dramatically in a very short amount of time to say this is actually the right thing for everybody?
All right, Hussein, thanks so much for all of the insight. Hussein Kanji, their partner at Hoxton Ventures. Now, coming up, Lavrov's warning. Russia's foreign minister says there's a serious danger of nuclear conflict. We'll dig into the very latest on Ukraine. That's coming up next, and this is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal
honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the House for business's greatest minds.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The biggest second round effect will continue to be a pressure on commodity prices, which will cause further inflation pressure, which may cause a further need for central banks to curb that inflation in order to manage either stagflation or possible even a recession.
Well, that was the UBS chief executive, Ralph Hammers. Now let's get the latest on the war in Ukraine. The Russian foreign minister, Sergei Lavrov, has warned there's a serious danger of nuclear conflict. It comes as U.S. Defense Secretary Lloyd Austin said Washington's goal was to see Moscow weakened so it cannot attempt a repeat of the war. Well, joining us now is our senior reporter for international affairs, Mark Champion. Mark, good morning to you. So are we seeing potential escalation here in terms of a more direct conflict between Russia and NATO?
Well, we're sort of edging in that direction. I mean, you have the Americans saying publicly what perhaps they've been talking about behind the scenes for some time, but that is that part of their goal here will be to degrade the Russian military just so that they just aren't capable of performing this kind of operation again, whether it's in Ukraine or elsewhere. And that's something they have not been talked about in public before. So, that is a significant step, and in this case seems to have been taken quite deliberately. And then on the other side, you have the Russians, again, talking up the nuclear threat. Lavrov saying that, this is serious and it needs to be taken seriously. And ultimately, that is the final tool that the Russians have to, to ensure they aren't defeated in any conflict, which they increasingly say is one not between them and Ukraine, but one between them and NATO, with Ukraine as the proxy. Russia has long had and been very well aware that it has a conventional weapons deficit relative to NATO. It could not win in a conflict with NATO directly, and therefore it relies on its nuclear deterrent.
So, Mark, there were also missile attacks on railways across western and central Ukraine. What does that signal in terms of a change in tactics?
Well, it's essentially you have this build-up and a long front in the east now with a new kind of campaign there, and both sides trying to supply it as fast as they can. So it's critical to the Ukrainians to get the weapons that the Americans and others have promised, the artillery, the tanks, the APCs, all this kind of stuff, the heavy weaponry to fight that kind of campaign, to get it the 1,300 kilometers all the way across from the Polish border or the Slovakian border to the Eastern Front. And the Russians are fully aware of that. And what they're hitting is the transport links, the storage dumps where they think this equipment is being moved, and trying to hit them so that it never reaches the east.
Mark, thank you so much. Mark Champion there with the very latest, of course, on this situation, what that could mean, given the rhetoric seems to be amping up. That was, of course, with Mr. Lavrov a short while ago. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kaylee Lyons will be in New York. Anna Edwards will be in London. This is a picture for European stocks. So we were seeing a nice little rebound since yesterday. The earnings are rolling in. European stocks are actually climbing after China's pledge to boost monetary policy support for its COVID-hit economy lifted sentiment. Traders across the board also eyeing a raft of earnings reports from some of the region's biggest company. Now, aside from valuing more assistance, there's a lot that we should talk about when it comes to BBOC, also saying it will promote healthy and stable development in financial markets. Most of Beijing is being tested for the virus, and that's really fanning fears of an unprecedented lockdown there. If you look at U.S. corporate earnings, they're also providing a bit of lift to some of the equity bulls. Close to 80% of firms have beaten profit expectations. This is Bloomberg.
end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
As with everything in markets this year, we have to be very careful.
It's been a pretty volatile year, and recalibration, I think, really is the right word.
Slowdown in growth is going to be very, very impactful, especially a country like China.
If we have a slowdown in China, it's definitely bad news for us.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, April 26th. Our top stories today. It's Beijing's latest bid to reassure investors. China's central bank pledges to help small businesses and quickly resolve the crackdown on the tech industry. Russia warns there's a real risk of nuclear war. The Russian foreign minister says it can't be underestimated. Meanwhile, he says peace talks with Ukraine will continue. And a big week for earnings. We've heard how European banks, UBS and HSBC, are navigating the market turmoil. And now that the Twitter deal is done, we will hear from Apple, Amazon, Alphabet and others in tech this week. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lines in New York. Matt Miller is off today. And Kaylee, European equity markets doing their best to look on the bright side, but looking at US futures, you wonder how long that lasts.
Yeah, and they tried to look on the bright side as well in Asia overnight, so we'll see if the US can follow through with that once the opening bell rings in about 4.5 hours time here in the States. Anna, as for that picture in Asia, you did see the MSCI Asia Pacific Index up for the first day in 4, higher by just about 0.25%. Of course, as you alluded to, Anna, PBOC coming out, pledging support on the monetary policy front for a Chinese economy that really is grappling with the zero COVID policy, promising to end the technology crackdown relatively soon. So you did see that reflected in Chinese tech stocks. The Hang Seng Tech Index was up nearly 3% overnight, but not a lot of positive read-through to Chinese equities. Yes, we didn't see losses at the scale. We saw them in the Monday session, but still that benchmark CSI 300 down about 0.8%. And of course, you did already see action yesterday on the Forex reserve ratio being cut by a percentage point, trying to stabilize the Chinese yuan a bit, but it remains right around its weakest level against the US dollar going back to November of 2020, trading at 656.65, Kriti.
Yeah, Kaylee, and it's really that story that's getting kind of read through into the U.S. session. Remember, it comes down to the growth scare, specifically the COVID lockdowns in China that you were just mentioning. Futures down, just marginally down, about 0.1%. But I think the real story here is going to happen in crude, and that's down 1.2% when you look at NYMEX crude futures. This is really important because this is no longer a supply chain story, an inflation story. It comes down to a fundamental growth and demand story, and that's really what's kind of weighing. But remember, anything can happen in a couple of hours. We are still expecting tech earnings after the bell today, which could really make or break the case for stocks and for risk assets broadly. But speaking of risk assets, we have to hit that 10-year yield because once again, you can see a bid into treasuries, which in the face of this inflationary hawkish environment is kind of strange. But once again, it really speaks to those demand fears. That being said, Bitcoin, another risk asset, up about 0.8%. This is really important because if Bitcoin is your risk asset and showing you that there is a little bit of a bid, will futures catch up closer and closer to the open, Anna?
Yeah, Chrissy, we are seeing a little bit of that bid for risk assets here in the European space. And I wonder with hindsight how we will look back on yesterday and analyse, evaluate how significant it was, because it was a real marked different session, wasn't it, to the week before where we were very preoccupied by inflation. Yesterday, it was the turn of growth to be back centre stage, Chinese growth in particular. And today, we're still wrestling with those themes and trying to work out which comes out on top, I suppose. But this is what we have for European equity markets. Whilst we wrestle with the themes, European equity markets looking to catch up with some of the late day rally in the United States yesterday. Was that driven by M&A around tech names? Was that driven by some of the comfort coming from China overnight? But we are seeing a little bit of movement higher on those European stocks. And in fact, nearly all sectors across Europe in positive territory, even if not by much. Brent crude, Chrissy mentioned what's going on with WTI, and we are seeing a little bit of a move lower on the Brent crude price, 101.40, not by the scale that we saw yesterday. We saw a number of percentage points taken off the crude price yesterday, but we do watch that for clues on growth. We also watch the euro. Are both of these really caught up with the Chinese growth narrative? Because the euro under pressure with a stronger dollar, the euro down by 0.25%. A banking focus for you here in terms of stocks to talk about here in Europe. We have UBS moving higher by just over 2%, and the focus really there on investment banking and the returns that traders can deliver through their trading activity rather than the wealth management side of things, which struggled a little more. HSBC down by 3.5%. They've had to acknowledge that the state of the balance sheet, the capital ratios they report mean that there's a little bit less likely chance of returning cash to shareholders in buybacks, and so that weighs on the stock. A look at Russian assets for you. Of course, our headlines talking ominously about those headlines from Sergei Lavrov, the foreign minister, those lines from him talking about the risk of nuclear war. We, of course, consider that. Worth noting that we are seeing the ruble bouncing back a little bit this in recent sessions, and in fact, as we work towards, so this from a strictly markets perspective, and this market pretty broken, as we heard from one reporter from Blue Bay, or one guest from Blue Bay just in the last week or so. We are working towards a central bank meeting, Russian central bank meeting on Friday, and then there is an expectation of interest rate hikes there, Kaylee.
Yeah, and we absolutely will be watching for that later on this week. As for what we're watching on this Tuesday and taking a look at the day ahead, of course, earnings will continue to roll out. Microsoft and Google's parent Alphabet will be among the big tech names set to report. Then UN Secretary General Antonio Guterres visits Moscow, where he will be meeting with President Putin and Foreign Minister Sergei Lavrov. And finally, economic data as well. The U.S. will release data on new home sales and durable goods orders, Anna.
Now, Kaylee, in China, the government's taking more steps to reassure investors nervous about growth and COVID lockdowns. The central bank pledged to support the economy through targeted financing for small businesses. Plus, it promised a quick resolution of the ongoing crackdown on technology firms. Let's get more from Bloomberg's Tom McKenzie, who joins me on set and has been watching this story in depth, of course, Tom. Worth noting that Chinese stocks ended the day in negative territory. So if there was any sense that this was to persuade a different risk appetite, that didn't work. But what did we hear?
Yeah, because the fly in the ointment is that we've heard these kind of comments from before from Chinese officials. They're repeating a lot of the similar lines that we've heard in the last few weeks and months. As you say, just to recap some of the key elements that came out from this PBOC statement, so that support for small businesses, support for sectors that have been particularly badly hurt as a result of the pandemic, so coal and aviation, and then pledging to wrap up in pretty quick fashion that crackdown on technology. But again, reiterating lines that we heard before. So investors and economists say there needs needs to be more in terms of the policy response from Beijing, particularly at a time when you're seeing mass testing of almost 20 million people in the Chinese capital, which is on the brink, teetering on the brink of a potential lockdown. So we continue to look and watch the COVID numbers out of Beijing and to what extent those lead to potentially a wider lockdown across the capital. And we're watching as well the Politburo meeting, which is taking place in the Chinese capital, the senior leadership of the Communist Party, whether they bring out the big bazooka to really support an economy that is under pressure, not just as a result of being hamstrung by COVID-0, but also the self-inflicted wounds, arguably, of the crackdown on the real estate sector and the technology sector. And that really is putting in jeopardy this 5.5% GDP growth target that they have set themselves for this year.
Yeah, how achievable is that really? Thank you so much to Bloomberg's Tom McKenzie. While we continue to focus on the situation in Beijing, we also continue to focus on the war in Eastern Europe. Let's get to the latest on Ukraine. Russian Foreign Minister Sergei Lavrov has suggested that talks with the U.S. could be useful as United Nations Secretary General Antonio Guterres continues diplomatic efforts to end the war with a trip to Moscow today. This comes after Lavrov warned that there is a serious danger of nuclear conflict. Joe Matthew, Bloomberg Washington correspondent, joins us now in D.C. Joe, we've heard the Biden administration warn of severe consequences should Russia use unconventional weapons, chemical, biological. What about if Russia actually resorts to nuclear weapons in this war?
Well, that's the big question right now. I'm not sure the White House has that answer. It's certainly not giving it publicly, as we have all pressed the administration to understand what exactly severe consequences might mean. In this case, though, striking comments again from the foreign minister in Russia, and not the first time. Vladimir Putin himself made a similar suggestion a few weeks ago, and we tend to hear this refrain when Russia is on its heels, or at least feels like it is and has been for the balance of this war. Over the weekend, of course, we saw the visit of the Secretaries of State and Defense in Kyiv. The optics there projecting American power and solidarity with our NATO allies, clearly not the vision that Vladimir Putin wanted to see here. And that has prompted a bit of this talk here to suggest, though, that negotiations are useful and that the U.S. is somehow blocking negotiations, as Sergei Lavrov has said, is curious after Putin himself, Kayleigh, just a couple of weeks ago said that talks had reached a dead end. We'll see how that plays after the Guterres visit today.
Joe, Congress is back in session. We know that there's already a military assistance package in the works, but potentially food aid on top of that. What would that look like?
Yeah. It's a great question. We're really waiting for a number at this point, Creedy. We heard last week from the president that he would make a supplemental budget request for military funding to have an uninterrupted flow of weapons. But you're right, when you add the humanitarian aspect here, we're talking billions. It will likely be a good $5 billion, according to some of the talk that's coming from the White House, which would match similar spending that we've made so far with Ukraine, a little bit more, in fact. But the idea is to not have to keep going back to the well and asking for more money every month as weapons and humanitarian relief are drawn down. It is likely we'll get a number here by the end of the week. And this could be one of the most bipartisan issues in Washington right now, as lawmakers on both sides of the aisle suggest that they will pass whatever they're asked for.
Joe, thank you very much, Bloomberg's Joe Matthew. You can listen to Joe every weekday on his radio program, Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Now, European bank earnings kicked off this morning with UBS, HSBC and Santander all reporting numbers. We spoke to executives from all banks this morning.
We are a commercial bank, highly geared towards higher rates. So, we are quite optimistic even, beyond 22, 23, 24 on the back of these much higher rates.
We did take some additional provisions in the quarter against the balance sheet that we have there. We took around $250 million of additional provisions for Russia exposures. And we do think that that's a fairly complete provision for everything that we can see at the moment.
The biggest second round effect will continue to be a pressure on commodity prices, which will cause further inflation pressure, which may cause a further need for central banks to curb that inflation.
Let's get more on UBS with Bloomberg's Manus Cranney, who was in conversation there with the CEO, Ralph Almers, and he joins us now from Zurich. Lots of different sort of news flow coming through from the UBS numbers, but the contrast between investment banking and wealth management, one of them.
It just wasn't supposed to be this way, was it? The investment bank was never supposed to be the bulwark to your wealth management business, but it was. $900 million worth let's say, of revenue at the investment bank, Anna. That's 30% more than the market had anticipated. It was an extraordinary quarter, in the words of UBS, and it was the best quarterly performance since 2007. It's a question of balance. The investment bank balanced the wealth management, transactions down by nearly 20%. And it was the flow show at the investment bank in the FX and the rates business and the equity business, but more so FX, that balanced against that drop in the wealth management. And it was Asia down, USA up. So for me, it's very much three sets of checks and balances that we come out here with the best quarter since 2007. The money flowed in and $19 billion of net new fee-generating income. If the alpha was buybacks in the first quarter, I'm struggling to see where the beta is going into the back half of the year. The headwinds are there from China, Ukraine, and indeed an overall risk from a rate shock in the USA. Anna.
Yep, a lot that these banks are facing. Thank you so much to Bloomberg's Manus Cranny. Now that's what's going on with European corporates. Let's talk about U.S. corporates as well, because Elon Musk and Twitter reached an agreement for him to buy the social networking platform for $44 billion. But there is a lack of details on how exactly he will fund it. Let's get to Bloomberg's Laura Wright with more. So Laura, he has to come up with $21 billion. How's he going to do it?
Well, he's likely to bring in a new equity partner or leverage the limited existing shareholders. Kaylee, we can see in the pre-market that Twitter is still trading below that magic number, $54.20. That's what the shareholders will receive. And that offer represents almost a 40% premium to where the platform was trading all the way back on April the 1st, the last day before we learned that Elon had become involved in the company. Now, if we dig a little bit deeper into the funding, as you say, Apollo Global Management, one private equity firm who has been associated as part of the deal potentially with Bloomberg, if he does keep on board some of those existing shareholders, Jack Dorsey, Twitter's founder, still has a $1 billion stake. Now, there is the critical question, is he going to sell some of his Tesla stock? He's got over $200 billion of wealth tied up in the electric vehicle company. But as we discussed last week, if he is to do so, that would send really a negative signal to the existing shareholders. It implies less upside to the share price. And we know that Elon loves his cryptocurrencies, Bitcoin, Ether, and yes, the Shiba Inu, Dogecoin. Bitcoin has risen over 700% since March of 2020. So that should help if he were to sell down some of his crypto, support this deal.
Laura, Twitter, Tesla, not the only tech names in the spotlight this week. Of course, we know this is also a big week for tech earnings, essentially the week that could make or break the market. Microsoft and Alphabet reporting after the bell. What can we expect?
Well, look, to start broadly, Kriti, we are seeing a number of headwinds in the sector. Rising yields, 50 basis point hikes from the Federal Reserve priced in. Consumer confidence has been dampened because of rising inflation, supply chain concerns for companies like Apple due to the war in Ukraine and COVID lockdowns in China. But from Microsoft, the focus is not only going to be on the Activision Blizzard offer, but also the cloud, intelligent cloud revenue expected to grow by 25%. And it's the cloud, remember, that allows the instant functionality of Office 365. For Alphabet, another cloud player, but Alphabet, interestingly, less impacted by those Apple privacy changes, which were a negative for a company like Meta Platforms, and it means that they can still generate that appealing advertising revenue.
All right, Bloomberg's Laura Wright, thank you so much. Both of those stocks relatively unchanged in pre-market trading at this point. But there are some other stocks that are moving in more dramatic fashion in early hours here in the U.S. One of them relating back to that Twitter story that Laura was just talking to us about, Digital World Acquisition Corp. This is the SPAC that plans to take Donald Trump, the former president's media company, public. It was down about 13% yesterday on news that Musk and Twitter had finally inked that deal, concerned that maybe Donald Trump was just going to go back to that platform if it was Elon Musk in charge. But Fox reporting that he has no plans to do so. So as a result, a little bit of a rebound for those shares, up about 6% in early hours. Another social media stock, though, is a little bit lower before the bell. That would be Meta Platforms, which of course operates Facebook. It will be reporting tomorrow. Ahead of those results, though, it's down about a 10th in early hours on this Tuesday. Also lower, a lot of the energy complex. Oil is down for a third day, coming back to those concerns about the demand picture in China. That is weighing on ExxonMobil, already down about 6.5% in the last 3 sessions, now looking potentially at a 4th day of losses, down a little more than 1% before the bell, Anna.
Kaylee, coming up on the program, Maria Weitmaner joins us, senior multi-asset strategist at State Street. We will talk about the markets, about how earnings can or maybe can't take on our worries about higher interest rates and stuttering Chinese growth. We'll also talk to Bruce Carnegie-Brown, Lloyd's of London chairman. Lots to discuss with him when it comes to the war and its links with the insurance sector. Plus, don't miss Bloomberg Crypto today at 1 p.m. New York time, 6 p.m. in London. Today, we'll be hearing from Ripple CEO Brad Garlinghouse. We'll also hear from Kathy Kraninger, former director of the Consumer Financial Protection Bureau. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Kaylee Lyons in New York and Anna Edwards in London. Matt Miller is off today. One of the big topics this morning and arguably this entire week is going to be the growth story. And what better way to look at that than through the oil market, specifically Brent time spreads. Now stick with me, it gets a little nerdy here. When you kind of trade oil, you tend to trade a premium in the first month contract to the second month contract. Essentially, it means that the need for oil, the demand, the growth, it's in the here and the now. When that time spread compresses, when that premium gets smaller and smaller, it's kind of a signal that perhaps growth is slowing. Perhaps that need for oil, that need for growth, it isn't that immediate. And that's a concern for markets across the board. And you're already seeing that in oil futures really dropping. This coming off of course, the COVID scare in China. And you can really see that for our TV audience, that premium closing. For our radio audience, just take my word for it. You're starting to see that extra kind of premium that you pay for that extra first month contract starting to decline. What does this mean for growth, not just in China, but for across the world? Can one region drag the entire global economy with it? Let's ask Ben Ram, the Bloomberg cross-asset strategist and also contributor to the Markets Live blog. He joins us now. Ben, how do you square this with the supply chain pressures?
Morning, Kriti. I do think that in the short term, the concerns about China are going to sap demand, and therefore crude oil is down. But if you look at the longer-term trajectory, I do think that what we saw in the markets yesterday was a one-day reaction, because at the moment it's the supply side of it, that's the supply bottlenecks that are going to be the focus of the markets. There is no case for a recession led by slowing demand in China anytime in the near future in the U.S. economy. I don't think we are still going to expect above trend growth in the US. So I do think that the narrative here is one of supply bottlenecks leading to spiraling inflation, and that is still the predominant story.
Okay, so that means then, good morning, Ven, that means you think that treasury markets in the US should go back to focusing on inflation and not be distracted by weakness in Chinese growth?
Absolutely, and we are already seeing that, Anna. We do think that the 10-year yield has a lot more to rise, and you will see that happening as we get closer and closer to the Fed May meeting, and also this week's PCE data. If you look at the 2-year, we have done about almost 200 basis points this year, and that's pricing in a lot of hikes. And the markets are at the moment factoring in 10 rate hikes from the Fed. I'm not too sure all of that will fructify, but the bulk of that will fructify. So I do think that the 2-year yield is pretty much approaching a top, but the 10-year yield is a different kettle of fish, and I do think that there is more upside for 10-year treasury rates.
Okay, Ben, thanks very much. Ben Ram, Bloomberg Markets Live. Thank you very much. Remember, you can get more analysis from the Markets Live blog. MLIV Go is the function to use on your terminal. This is Bloomberg.
Has stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
stocks are rebounding in Europe, but U.S. equity futures struggling to catch up. We'll discuss this equity market with Maria Vetmana, senior multi-asset strategist at State Street, coming up next. This is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. In China, the government's taking more steps to reassure investors nervous about growth and COVID lockdowns. The central bank pledged to support the economy through targeted financing for small businesses. Plus, it promised a quick resolution of the ongoing crackdown on technology firms. Russia's Foreign Minister Sergei Lavrov warns that there's a serious danger of nuclear conflict. Lavrov told Russian TV the risk cannot be underestimated. He also said that peace talks with Ukraine's negotiating team would continue. And a big week for earnings. We've heard how European banks, UBS and HSBC, are navigating the market turmoil. And now that the Twitter deal is done, we will hear from other tech names, Apple, Amazon and Alphabet. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lyons over in New York. Matt Miller is off today. And Kriti, as we head towards the European session, today feels like we're in a bit of a holding pattern after yesterday's quick about-face in markets. A whole new theme, or a seemingly new theme, or back to maybe a theme we should have been playing for a while but had forgotten.
Yeah, it kind of seems like that. At least here in the States, it seems like a little bit of a risk-off move, but to your point, a marginal one at that. And this is important because you see futures down 0.3%. You have the 10-year yield yield getting a little bit, or 10-year note, as they say, getting a little bit more of a bid, 3 basis points lower. But remember, just 3 basis points this early in the trading session, even in the pre-market, is a big deal. Remember, we've been seeing moves of 10, 11 basis points. So we're really going to keep our eye on that. Crude, of course, down 1%. But once again, compared to the volatility that we've seen lately in the oil market, a 1% drop isn't that bad, just given the context that we're in, talking about supply chain, talking about demand. So we're going to keep an eye on that volatility. But to me, and Matt Miller would be very proud of me for saying this, Bitcoin, very important asset to watch because it's actually up 0.8%. But once again, put it in context of the volatility. A normal move for Bitcoin on any given day, a 1 standard deviation move, if you want to get nerdy, is about 4%. So to see it only up 0.8% on a broadly risk-off day when you look in the other asset classes, that's significant. We'll see which side wins. The risk-off you're seeing in futures or the risk-on you're seeing in Bitcoin, Kaylee.
I love the Bitcoin talk, Creedy, and we'll be talking much more about that on Bloomberg Crypto later on today, 1 p.m. Eastern Time. Shameless plug. Don't miss it. Now, as for the action in pre-market trading, of course, the story that really continues to dominate our focus on the corporate side would be Twitter and Elon Musk's deal to buy the company for $44 billion or $54.20 a share. Interestingly, though, the stock's still trading below that in early hours, right around that 52 level, only up about 0.6%. Now, of course, there are questions we still don't know the answer to, including how exactly is Elon Musk going to come up with that $21 billion in financing that he is personally guaranteed? What will it mean for his Tesla stake in particular? You saw Tesla down a little bit yesterday on questions surrounding that, but right now it's up about 0.4 in early hours. Then, of course, aside from that acquisition and the take private of Twitter in the technology space, it also is a big earnings week, and we'll be having 2 giants reporting after the bell, both Alphabet and Microsoft, both of them at this point unchanged in pre-market trading, Anna, as we wait for those results.
Yeah, absolutely. A lot to focus on technology, from Twitter to all of the earnings stories are due out this week. So a big focus on technology, as we point out. Stocks here in Europe then gaining up by 0.9% across European equity markets. But really, we're playing a little bit of catch up with the better mood that we saw on Wall Street yesterday. And some of that was provoked by that Twitter news. And so we shouldn't skirt over that. Kaylee, that was a big focus. Just jumping in here, then the Brent crude the Brent crude price as well, down by 0.7%. So not the size of moves we were seeing yesterday, but we are continuing to see a little bit of movement lower in the oil price as a result of our reevaluation of what's going on in China and the growth story there. That also hurting the euro today. UBS in focus, up by 2.4%. The investment banking side helping out the business, where the wealth management side was perhaps a little bit more lacking. HSBC also in focus, down by 3.5% as the bank had to acknowledge that returns of cash to shareholders in terms of buybacks a little bit less likely given the capital ratios they just reported. Quick focus on Russian assets for you then. This is what we have on Russian stocks as we work our way through this week. And interesting to look at where the ruble is. The ruble gaining a little bit of ground this morning. We are working towards, of course, a rate decision from the central bank over in Russia on Friday. That'll be a focus for those still playing in what is a fairly broken market at this point. Kaylee?
Yeah, a lot of questions surrounding the Russian market, Anna. Let's get more on these markets with Maria Weitmana, Senior Multi-Asset Strategist at State Street Global Markets, joining us from Milan, Italy. So, Maria, as Anna was just detailing, you have major questions around Russia and the war in Ukraine. We have questions now about growth in China, the tightening of monetary policy here in the U.S. and in Europe with the specter of higher rates. Why are you still constructive on the equity market longer term?
Yeah, I mean, I have been quite bullish on equity market for quite a few years. And for me, one of there really have been absolutely 2 key drivers over long term for stronger equity performance. One is how high interest rates can go. And right now, central banks are faced with big inflation problem, and we have very, very hawkish rhetoric coming from there. And what we're expecting is very, very front-loaded hiking cycle. However, if we look far ahead, what is market pricing in the kind of long term? It's still we probably will have negative real Fed funds for almost a decade. So monetary policy in our book is still fairly accommodative. But more importantly, right now is the corporate earnings, and corporate earnings so far have been very reliable, very strong. So equities are almost in the world of very very challenging, volatile market, can offer you this kind of port of stability given the strength of the balance sheet and stronger earnings coming through. So earnings really important right now.
Okay, so earnings really important. That's a big focus for us this week, of course, Maria. Good to speak to you. When you look forward, though, and it's usually the outlook statements that get the attention, really, from investors when it comes to those earnings stories, are you getting any sense of how nervous we should be about the inflation that is still to come and the ability or not to pass that on? Because there are signs in certain Western economies of consumers stumbling.
Yeah, no, absolutely right. So my favorite way to get corporate guidance, which is incredibly complicated, as companies always kind of talk about it in a very kind of subjective and descriptive way, so very hard to get hard numbers. So the way we try to assess corporate guidance is to look at analyst estimates since the start of reporting season, or maybe even prior to the reporting season, what kind of analysts hear from companies. And since the start of the reporting season, I mean, we only had like a couple weeks of it, but earnings estimates have been, and particularly margins estimates, have been fairly reliable. So margins have been fairly flat in most of the countries. So Europe is really one place where we're seeing weakness, and I suspect that's a lot to be attributed to the war in Ukraine. So supply chains are disrupted, and European companies are likely to see the highest increase in commodity prices and energy costs. Consumers are likely to be squeezed the most. So Europe is one area where we're seeing weakness in margins. But broadly, if we look broader, like US and kind of Latin Americas and kind of commodity-rich areas, Pacific ex-Japan, so margins there actually seem to be quite robust, quite stable. So I think broadly speaking, it's still okay, and I think we're kind of relying on the still cash saving and strong corporate balance sheet to offset the rising costs, but that's definitely not true everywhere.
Maria, when I think of inflationary pressures, I tend to separate them essentially into two categories. Essentially, the pre-war inflation that you saw in housing markets, auto loan markets, for example, the cost of living, versus, say, the commodity pressures that have really been exacerbated by the war in Ukraine, as you mentioned. I'm curious, though, of the role that China plays here. If you start to see mobility data, for example, point to lower exports coming out of China, does that actually pressure some of that pre-war inflation that's been easing so far?
Yeah, no, I think you're right. So there are, I mean, right now inflation is, I mean, all kind of pull and push factors and kind of very, very multifaceted. So we can't really think about it in a kind of traditional way. But thinking about China, I think it's the way we try to think about it, and the way we'll look at a lot of kind of media coverage of shortages. And before Chinese lockdowns, particularly in corporate communications, we saw focus on shortages started to come down, particularly like labor shortages was coming down. So that was encouraging. So Chinese lockdowns, that can potentially offset this some improvement in terms of kind of production bottlenecks. So that can potentially get a little bit more complicated. But I guess it's probably very, very strongly depends on how long the lockdowns will last in China. I mean, the latest report we heard was that some production activity is still allowed, so employees just have to kind of isolate within factories. So some activity is happening, and how much of it will be allowed to happen is, I mean, still unknown. But just prior to kind of outbreaks of COVID in China, we saw some improvements that gave us kind of some positive
and Maria, of course, that has implications for companies, technology companies like Apple, which have production and assembly centered in China. On that note, how are you thinking about technology more broadly, considering we have the giants reporting earnings this week?
Yeah, I mean, you probably remember us being very constructive on technology stocks for years. And for us, the real key strengths of technology companies is the stability of earnings and strong earnings growth. I mean, we keep pointing back to the fact that technology companies were pretty much the only companies in the last decade that consistently invested in R&D. So they were able to build strong margins, strong moats around their businesses. So that's kind of, for us, has always been kind of bastion of stronger earnings. That's probably still true, and we're particularly attracted by the fact of like companies have still lots and lots of cash on their balance sheet. They're able to spend, they're able to pay buybacks. So that's in the current world where, I mean, there is hugely uncertain and kind of lots of kind of pressures coming from tighter policy. That's really, really, really strong advantage technology companies are having.
Okay, we'll watch that R&D spend then, Maria. Thank you very much for joining us. Maria Weitman joining us there from State Street, Senior Multi-Asset Strategist. Still ahead, we will hear from Lloyd's of London Chairman Bruce Carnegie-Brown to talk about life in the city, to talk about the way the insurance sector is navigating war in Ukraine and much beyond. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Kaylee Lines in New York and Anna Edwards in London. Matt Miller is off today. UBS leaned on traders at its investment bank to post better than expected profit in the first quarter after its key wealth management business was hit by slowing client activity and rising costs. CEO Ralph Hamers spoke to Bloomberg's Manus Cranney about the bank's outlook.
Asian investors are more in a wait-and-see pattern, so you see transaction income down from a year ago. However, net new fee-generating assets still positive, also in Asia, so more money coming into mandates there. And then you see that in EMEA and Switzerland, you see a real pickup of demand in terms of investment, and also the US. So indeed, one region may be still muted from a transaction income perspective. However, money flowing in, even in that region.
The biggest threat, you say it's an extraordinary quarter and you name a lot of reasons. In your view, what is the biggest threat to the rest of the year?
Well, if you look at just to come back to this quarter, because the current circumstances have both challenges and opportunities, and that's what you saw this quarter as well. And I really want to make that point. The challenges are, okay, what is going to change tomorrow? The opportunity is, how are we going to help our clients with liquidity, with execution? That's how we delivered our best quarter ever in global markets, for example. That's the opportunity. The threat is, okay, is transaction revenues going down on the wealth management side? But we see more and more money still coming through. So our brand is out there as a beacon of stability. Our capital strength shows that clients have trust in us. So you see opportunities and threats. And with things being so unpredictable, you can only rely on what you're really strong at, which is your own advice and your own stability. And that's what we bring to our clients.
When I look at China, there's a sense of panic in the currency market. growth levels are being stripped back aggressively. Do you see any material deleveraging or risk in your business in China and Asia?
Well, we have seen deleveraging in the last 3 quarters in Asia Pacific specifically. So yes, we saw that, and that is normal because on the back of a lower market, you also see deleveraging because generally the leverage that we provide is basically financing the position in the stock market. So if the stock market goes down, the leverage goes down as well. So it is almost a mutatis mutandis relationship there. So yes, we do see that. On the other side, we also see that investors, also in Asia, are looking at recycling their risk. They are looking at managing their liquidity. So there's also opportunities there with a very strong investment banking quarter, also in Asia.
That was the UBS CEO, Ralph Hamers, there speaking with Bloomberg's Manus Cranney. Really interesting here to think about what this tells us about how the wealthy then have handled the war in Ukraine and what they've done from a managing their money perspective, Kaylee. And interesting to see then that wealth management reported a 19% drop in transaction income. So the wealthy sitting this out and saying we're not going to participate, whilst investment banking managing to actually make some money out of this.
Yeah, the investment banks, specifically trading, Anna, is really what these banks have to rely on, because not just on the wealth management side, on the deal-making side as well, the war in Ukraine has caused a lot of, I guess I would say, a cooling in that market in particular. So they're really having to lean heavily on trading.
Yeah, and we certainly saw that coming through as a theme in the US bank earnings season. Coming up on this program, Lloyd's of London chairman Bruce Carnegie-Brown will be with us shortly to talk about the insurance sector and how it copes with war in Europe. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lyons over in New York. Now, Russia's move to transfer foreign-owned jets to its own aircraft register amid foreign sanctions has triggered a wave of insurance claims. However, Lloyd's of London sees the cost of the war as less than estimated by some, perhaps, saying that insurers' liability was limited to around 10% to 15% of the asset value of jets struck in Russia. We'll get into that detail in just a moment. Lloyd's chairman Bruce Carnegie-Brown joins us now. He's just come rushing. Actually, I'm not sure if he's been, I was going to say running, but I'm not sure if that's true, from the Guildhall, where he's been discussing the future of financial regulation at City Week. So you've been talking about regulation this morning, Bruce. Good morning to you. There's clearly a lot of interest in what you've been saying about aviation, so we'll get to that in a moment. But the sober issue of war on the continent of Europe, this must be impacting your business. That you must be seeing the Lloyd's market must be seeing claims coming from all kinds of parts of the global economy. How does it leave you positioned and those who operate at Lloyd's positioned?
Well, good morning. Yes, I mean, these events are, of course, shocking, and I think it's quite embarrassing to be a European to see that we've got yet another war on our continent. In terms of its impact on the insurance market, relatively muted on a direct basis. Less than 1% of Lloyd's revenues come out of either Ukraine, Belarus, or Russia itself. So the issues are mostly second-order risks for us, and you alluded to aviation there a moment ago. Clearly, there are big fleets of Boeing and Airbus jets that are leased mostly by Irish companies to Russian airlines. And so those have been impounded. And as an example, we then move from understanding what the asset values of those aircraft are to what the exposures are for the insurance industry, and then, of course, down to what the losses will be. And of course, it's relatively complicated because different risks are covered by different insurers. So hull risks are different from engine risks, are different from the risks of the airline itself. And then, of course, some risks kick out when war occurs. There's a cancellation event when a war occurs, and other risks kick in. It's also multifaceted, so there are specifically issues around political violence, of which this is clearly an example. There are credit flows in terms of the insurance of credit payments across borders. So we're still evaluating all of that, and quite hard to put a number on that. I think we will have a number for Lloyd's exposures by the end of May, and most companies will have to be thinking about what provisions they're putting up for their half-year results.
Okay, so it's not as simple as taking the value of the aircraft and saying, well, these aircraft were insured, therefore this is the number. It gets more complicated than that. Is it because some policies simply don't apply at times of war, then?
Well, of course, there's a sanctions regime as well in terms of what you're allowed to cover and what you're not allowed to cover, because if your insurance is deemed to be supporting Russia, you have to cancel it straight away. And of course, that will be a discussion, because arguably the beneficiaries of our insurance policies are actually mostly non-Russian owners of these planes that happen to be leased to Aeroflot and other airlines. So those kinds of issues need to be worked through. There is a right of termination in most insurance policies related to war events. So unless you bought a war cover, you may not be covered for that kind of event.
Is there any parallel with any period of history here? I mean, I'm thinking about the immediate aftermath of 9/11, where it seemed for a period that perhaps aviation, planes wouldn't be able to fly because there wasn't any insurance to cover it, perhaps, and governments were forced to temporarily step in. Is there any sort of parallel with that period?
Well, some, and so actually the industry is pretty good at adapting to these changeable events. It's the whole purpose of insurance is to take risk off our customers' balance sheet and take it on to our own. What's I think a bit different here is sanctions policy, because that is more coordinated than it's ever been. There were no sanctions post 9/11, certainly not in the immediate aftermath of 9/11. And of course, it's important that different jurisdictions manage these in a coordinated way, because otherwise gaps in risk and coverage occur. So we've been spending quite a lot of time on that issue.
Can I ask you about something completely different? And that is, we're sitting here in the City of London, and you occupy, your business occupies a really iconic building in the City of London, designed by, very famous architects, and a real piece of architecture you can pick out, certainly from a distance. Are you planning to stay in that building? We understand that you're negotiating with landlords at the moment, and it's a beautiful thing. We're showing pictures of it now. Are you planning to stay there?
Well, we'd like to stay there. Clearly, we want to drive a hard bargain with our landlords, so it's unsurprising that there would be noise out there. There's a break in the lease in 2026, yes, 2026, which I think would be too soon for us to move out, and so the focus is really on 2031, which would be the next break. I'm hoping we'll reach agreement with our landlord actually in the next few weeks, and that we'll have an outcome that allows us to stay.
So we'll look for agreement there then in the next few weeks. There's been protest activity outside your building, Extinction Rebellion very active in the city of London. Are they, they're asking you to withdraw insurance from certain parts of the fossil fuel industry, but you've already made some moves in that regard. What's the latest?
Well, I think we've got to go through a transition, and our job is to support our customers going through that transition. We need it to be urgent, but it needs to be orderly as well. And so we're trying to avoid cliff edges for our customers, but we absolutely recognize, and we've made commitments to getting to net zero by 2050. And to the point you've already made, we've made some guidance to the market about not underwriting new thermal coal projects, for instance.
Okay, all right. Thank you so much for joining us, Bruce. Bruce Carnegie-Brown, the Lloyd's of London chairman, joining us here, hot on the heels of his appearance at City Week. European equity markets on the back foot, down by 0.9%. US futures negative 0.3% this hour. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
We saw nothing organic in the economy that was going to bring down inflation. So that means that the Fed needs to fight inflation.
The impact of high inflation on the real income will start to be a bit more visible.
Really, the trajectory for growth is what's going to dictate if the Fed's going to be able to continue to raise rates aggressively.
We've been recalibrating Fed expectations all year long.
We have to be very careful, right? All the cyclical dynamics we're seeing are pretty much unprecedented.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures on the S&P, negative 0.2% on the S&P. TK, what a big day for big tech.
Big day for big tech. We're going to get there. First of all, I got to tweet out, John, because I'm getting my tweets out before the wall of ads come in. It's a big day. And I'm sorry, Microsoft, we love to talk about Apple, Twitter, Google, all the other razzmatazz, Netflix. John, do we talk enough about Microsoft?
No, and it's a heavyweight on that particular index on the S&P and the NASDAQ too.
No, there's no question about it. With the cash build up and leading away and the transfer there from the original management to the new management, it's been the giant success story. Everybody will be watching that, John, to separate out profit-making, stable haves from the unhaves, the have-nots, if you will, of tech. Is Twitter a have-not, John?
Twitter, a little bit later this week. They're going to report earnings, Tom. They're not going to do an earnings call. I do wonder, Tom, what those earnings actually look like and whether that's a factor in accepting that offer from Elon Musk for $54.20, given what happened with Netflix just last week.
Scott Kessler's to be with us here in a bit, John, but you just wonder, maybe the conference call is going to happen this afternoon when Mr. Musk tweets out.
Hey, Lisa, we've got a price. We've got an agreement on a price of $54.20, $44 billion. Can we close this transaction? I think we've got to spend a little bit more time on that instead of thinking about the future of what this company looks like with Elon Musk.
I completely agree, especially because shareholders have to sign off on it. And of course, Elon Musk, we know that he's going to have the equity position, but is he going to share it? He wants external investors in this company. Will he get them? And then how does he finance this truly if he doesn't get that type of external participation?
And the cost of the debt as well, Bramo. I mean, a lot of people have framed this as a moral crusade, maybe moving the company away from for-profit to something else. And I'm just looking at the cost of the debt, Lisa, and wondering whether he can really actually do that.
When you have a leveraged buyout, one of the biggest in years, you have real investors, you have people who actually want to see the money. Can he deliver it at a time when he's really crafting this, as you say, in moral terms?
Let's whip through the price section and get you geared up for a big day ahead. We have earnings from Alphabet and Microsoft after the close. Those two names, 17% of the NASDAQ 100, just two names. We're negative 0.2 on the NASDAQ 100. On the S&P, we're down 0.2%. Also, yields come in 3 basis points on a 10-year to 278.93. But TK, we have got to talk about this one briefly. A 106 handle on euro dollar. That's a big move in the last couple of months.
For all you pumped up on equity, this is the true backstory this morning. I'm thrilled Jordan Rochester will join us here with his brilliant call, a weaker euro. Right now, he looks like a genius, John. And the answer is, when you talk to the adults of global Wall Street, this is what they're focused on. They're focused on yen, 127, 128, weaker yen out to 130, not there yet. And John, what would you say? 105 is the emotional point for euro. We're halfway there.
I'd say this. A few years ago, this used to be an objective. Lisa Abramowitz, this is now a problem.
And it's a problem as we get the potential threat of a recession. And it's not just the conflict in Ukraine. It's very much having to do with what's going on in China. And yes, China is trying to stimulate their economy. But can they do enough at a time when so much of their economy is completely locked down? Today, here's what I'm watching. UN Secretary General Antonio Guterres is visiting Moscow. He is there now. He is visiting with Sergei Lavrov. After that, he's going to have an appearance with Vladimir Putin. Can we get peace talks off the ground as the threat of nuclear war is floated by Sergei Lavrov? We're also going to hear from UN Secretary General Jens Stoltenberg later this morning at 11:45 after speaking with Ukrainians. Today, we get a slew of U.S. economic data. We can focus on a whole number of them, whether it's durable goods orders, but I want to really talk about housing prices, which we're going to get at 9 a.m. We get a number of gauges of housing prices at a time when we're still seeing prices near the record highs. How much do we see that continue at a time when people are looking for anywhere where we could possibly get a sense that perhaps the tightening financial conditions, particularly in mortgage debt, is actually having an impact? And then today, of course, it is tech earnings across the board. Microsoft and Alphabet. The interesting thing about these, as Tom said, the haves and the have-nots, that partition, cloud very much the haves, right? That is the stable revenue sources. What about advertising, John? How much do we get a sense of where the emphasis is at a time when the consumer is really in question?
Bramo, thanks for that. Looking forward to those earnings a little bit later. We have some earnings now from PepsiCo. Beat and a raise of the outlook as well, Tico. Now seeing full-year organic revenue at plus 8%.
Yeah.
The estimate was 6.37. They had previously seen it up 6.
The Frito-Lay Corporation masquerades as a soda company, John. This is a different story than Coca-Cola. And I think that 8% is really, really important. It speaks to the nominal GDP, the inflation plus real growth that's out there. But again, the view forward there is important. Those are big, big organic revenue numbers.
Haven't seen this headline in a while, Tom. 2 percentage point FX translation headwind. Do you think we might see a little bit more of that?
I think nice to bring that up. I've always played it down. It's a media darling, John. But the fact is, maybe this time around, FX really matters.
Elisa, given where the dollar is, I think it matters right now.
Well, we saw a similar type of calculation from Coca-Cola. These are the classic ones because so much of their revenues come from overseas. I do wonder, though, this always becomes sort of the canary in the coal mine, right? The idea that this is used as an excuse at a time of otherwise some other potential headwinds.
It's a great excuse. It always is. The stock's not doing much in the pre-market. It's down about 0.1%. Doing something in a big way is Elon Musk, securing a $44 billion deal to acquire Twitter and take it private. Scott Kessler joins us now, Vice President and Global Sector Lead for Technology, Media and Telecommunications at Third Bridge. Scott, I want to start here. They've agreed a price. He secured a deal. Can they close this transaction?
You know, I think a lot of people are expecting that this deal will close. I think yesterday at their all-hands meeting, they talked about within 6 months. That seems somewhat arbitrary, but it seems like the perception is that they, in fact, will close this transaction. Musk has filed documentation related to the elements of the financing. I think Morgan Stanley is involved in that process. Will others come in? That remains to be seen, but I think the conventional wisdom is, in fact, that this deal will be consummated.
Scott, you know, I look at the back of the envelope work you're acclaimed on, and I want you to do the back of the envelope work on where a Tesla price generates the mother of all potential margin calls in the history of Wall Street. Our people have, you know, run it out nicely here, Tom Maloney and Creighton Harrison, and the bottom line is, if Tesla goes down, how much is Mr. Musk at risk given 58 gazillion shares?
Well, I haven't done that math, but I can tell you that that would seem to be a risk. Obviously, if you look at the source of Musk's wealth and some of this financing, it is directly related to his holdings in Tesla. So it would seem that would be a vulnerability. To the extent that he has potentially hedged that investment, I don't have any direct knowledge of that. I would encourage you to reach out to him or his representatives on that front.
John, ask the next question. I'm going to call Elon right now.
You're going to call Elon Musk?
Elon,
Lisa, have you got a
tweet
number?
him directly, Tom.
Can we get hold of Elon Musk, Lisa? Have you got that number?
Yeah, of course. We'll work on that in the break. Scott, I do wonder, though, how much Twitter is actually worth, right? Whether we have a sense of how much Elon Musk is overpaying at a time when the board took this deal and ran because it was probably the best deal they could have gotten.
Yeah, you know, that's a topic that I think hasn't been talked about quite as much. And I think it's important to understand when this whole process began, I think a lot of people just assumed, oh, Musk is looking to buy Twitter. That's interesting. My take was kind of like, hey, this is the beginning of a process. Twitter's board is now obligated to engage with advisors and reach out to third parties about their potential interests. I think what's noteworthy, as you point out, is it doesn't seem like there was much other activity around participating in a buyout of Twitter, separate from what Musk is doing. And in fact, what Musk indicated was, in fact, 54.20. That was the initial offer. That was the last offer. That was the agreed to offer. That, I think, strongly suggests that this was by far not only the most compelling offer, but perhaps the only one.
Scott Kessler of Third Bridge. Scott, thank you, buddy. As always, good to catch up. Jeff Bezos, maybe with the tweet of the last 24 hours. He put this out yesterday evening. Interesting question. Did the Chinese government just gain a bit of leverage over the town square? And I think this is going to be fascinating, Lisa, given Tesla's dependence on the Chinese market right now, just how that plays out when it comes to Twitter.
It's a fascinating point, especially as we talk about the new town square being a public company, now a private company with less oversight, perhaps, in the same kind of way and less transparency. How much pressure will there be on the company and, frankly, on Elon Musk, or does it actually make it easier? I mean, honestly, how much are we going to be talking about what the meaning of free speech is and how Elon Musk represents that in his protocol around Twitter?
Dan Ives of Wedbush talked about this yesterday morning, Tom, at how this could invite some scrutiny of his other company.
Oh, there's no question about that. John, I think the autopsy here that we're going to see, if we can get out front of all the navel-gazing, if not this transaction comes through, is the massive squandered opportunity to make a revenue-making or down the income statement profit-making company. There's no end or buts about that. Twitter did not succeed at that. And some people would suggest, including Ms. Abramowitz, that this is the price.
In our 60-second meeting this morning, Tom, you and I talked briefly about the prospect that maybe this goes private and then becomes a public company again in the not-too-distant future.
Well, I don't want people to think we're spending too much time over the tape.
It was about 60 seconds.
60 seconds, and about 42 of those seconds is our entourage is catching up as 57. Well as they do. And here's headlines coming out right now. Enters the new debt commitment letter, amended equity commitment letter. I've got a commitment, John, to have Tang in the break.
We'll go through some of those details in just a moment, Tom. Futures down 1/3% on the S&P. It is a big day for big tech. We kick off tech earnings with Alphabet and Google.
Tang's a little warm.
The same company. I still can't call it Alphabet.
No.
Nope.
Can we just call it Google?
Yes.
Facebook,
Thank
Alphabet,
you.
thank you. No,
Okay.
Google, Facebook.
Not Meta. Google and Microsoft after the close.
This is Meta.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Call it Elon Musk's $21 billion mystery. Where will he get the cash to buy Twitter? Musk has agreed to buy the social networking platform for about $44 billion. He's outlined how the financing will work for the $25 billion of that, but he's been short on details on how he'll cover the $21 billion equity portion that he's personally guaranteed. He may get other investors, or he could sell some of his beloved Tesla stock. Russia's Foreign Minister Sergei Lavrov warns that there's a serious danger of nuclear conflict. Lavrov told Russian TV the risk cannot be underestimated. He also said that peace talks with Ukraine's negotiating team would continue, even though many in Russia believe that Ukraine's position is set by the US and other Western countries. And in China, the government's taking more steps to reassure investors nervous about growth and COVID lockdowns. The central bank pledged to support the economy through targeted financing for small businesses. Plus, it promised a quick resolution of the ongoing crackdown on those technology firms. In the UK, Prime Minister Boris Johnson will tell his cabinet today to come up with innovative solutions to the rising cost of living, but they can't rely only on public funding. Opposition politicians have accused Johnson's government of doing little to soften the blow of the soaring inflation. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
It's very important to do everything possible to support all countries around the world in relation to the food, in relation to energy, in relation to finance. So these are also very deep interests that I have in the present moment, to do everything possible to end the war as soon as possible.
That was Antonio Gutierrez, the UN Secretary General from New York City this morning. Good morning. Futures negative on the S&P and on the Nasdaq 100. On the S&P, we are down lower by 1/3 of 1%. On the Nasdaq, we're down by 1/3 of 1%. Also, big tech reporting after the close. You've heard that story a few times. Google and Microsoft, and then on to Facebook tomorrow, and Amazon and Apple on Thursday to round things out. In the bond market, yields head south by 3 basis points to 278.74. Euro dollar a 106 handle, 106.81 on that currency pair, negative 1/3 of 1%. On Twitter, talking about Twitter on Twitter, Senator Warren saying the following: this deal is dangerous for our democracy. Billionaires, Tom, like Elon Musk, play by a different set of rules than everyone else, accumulating power for their own gain. We need a wealth tax and strong rules to hold big tech accountable.
John, you know,
you're lost for words.
I'm lost for words here because I think so much is fluid, and I like what you said 19 minutes ago. Can we assume this deal is done? And I'm not really sure we can do that.
We can assume he's secured a deal with the board, Tom. I don't think we can assume that that deal closes.
Yeah.
You never can, ultimately, can you? You've got to wait.
Anybody who knows the margin call math of the price of Tesla, if it went down where Mr. Musk would be in trouble, let me know what that number is. I'm trying to work through the math right now. Right now, working through the math in Washington. Joe Matthew joins us for a Washington brief this morning. He will always be the general, the Secretary of Defense, Mr. Austin. He is indicating, Joe Matthew, a change in tone by the Biden administration. Color that tone for us this morning.
The tone of Ukraine winning. This is really a fascinating shift over the past couple of days, really culminating in this visit by Austin and the Secretary of Defense Blinken in Kyiv over the weekend, this so-called clandestine visit. They got in, they got out, and the message was Russia's doing even worse than you thought. By looking at the hardware left on the side of the road and the human loss here. Austin is suggesting that Russia's down. We need to keep them down, Tom, with this new shipment of weapons and now a big conversation. And by the way, today's going to have a lot to do with the way this this ends. We're waiting for the number that the Biden administration will request from Congress. It's going to be in the billions. And today, in Germany, Ramstein Air Base, Austin is holding a meeting with military leaders from 40 countries. The chairman of the Joint Chiefs will be there. This following their conversations directly with Zelensky over the weekend to find out, what do you need? Not just how much money, but what are the actual pieces of hardware that we can give you to win the battle for the Donbass?
What is the difference here of a kid out of West Point whose first assignment, as is often the case out of West Point, is the 3rd Division, 3rd Infantry Division of the United States Army? How much critical mass does he have with a bunch of politicians more worried about the Macron victory?
Well, they're also worried about getting this right. And the Biden administration does seem to want to give deference to the Pentagon, much like it has with its diplomatic corps. Instead of having the president kind of lead the way on this, let's talk to Austin, by the way. You want to talk about the way we should be using artillery in the battlefield. That's, in fact, the conversation going on right now. We understand from John Kirby at the Pentagon that they have just now finished up howitzer training. There's some 70 howitzers we sent over there that can shoot much further than the Russian artillery. We've sent their trainers back into Ukraine to start spreading the word here. And a pretty interesting thought to have the Secretary of Defense, someone who's actually experienced that on a firsthand level. That conversation today in Germany will come back here to the United States. Then the politicians will do their work and try to put together a spending plan on Capitol Hill.
Joe, will there be a meeting between Vladimir Putin and Joe Biden?
I can't imagine this.
Well,
Even today, with the Secretary General of the UN going to Moscow, there's a lot of skepticism, not a lot of love coming from Ukraine. They don't love this look of Vladimir Putin sitting down with people in front of cameras and being given the benefit of the doubt. To think that Joe Biden could meet even virtually with Vladimir Putin seems like a long shot at the moment.
The reason why I ask is because Sergei Lavrov was talking about how it does look more likely that the Biden administration will hold talks with Vladimir Putin, that there is some daylight there. And it doesn't seem like that's the case from the administration side. And I'm wondering how we can interpret not only that, but also the comments about the nuclear threat coming out of the Kremlin.
I think you can interpret that to mean that that was a pretty successful visit by Secretaries Blinken and Austin. Russia is on its heels right now. They know that this isn't going terribly well, and we've heard this refrain when it comes to this reference to, well, look, you know, we hate to see this might become a nuclear conflict, just to poke officials back here in the U.S., get them talking, get people wondering about what's going on. But the fact of the matter is, Vladimir Putin himself said talks were at a dead end weeks ago. So Mr. Lavrov may be having a conversation with himself right now.
Joe, good to catch up, buddy. As always, Joe Matthew, thank you. Looking forward to Sound On Bloomberg Radio, weekdays at 5 p.m.
I do that a
Eastern Time. You talk to yourself too,
well,
Lisa.
Of course, that's a sort of casualty of parenthood.
Do you do that on this program as well?
Sometimes, I don't know, you tell me.
I feel like I'm doing that sometimes. GE, the ultimate boomer stock. Here it is. Adjusted EPS 24 cents, the estimate 20 cents. TK, I know you've got things to say. You can come in a second and say it.
It's a jumble. You know, I think the stereotype is it's a boomer stock. This is a massive restructuring going on right now. I noticed they got a $3 billion buyback authorization of some type. I think, John, what I really want to know there is what they're doing with aviation. I mean, I think that's sort of the sterling child. And with the airline recovery, you wonder if that's going to, they say your demand remains strong.
Monitoring China, though. Monitoring China. The aviation business, Lisa, managing China, COVID, uncertainty.
And frankly, this is a huge question mark, not only because China was a huge source of demand for a lot of aircraft that seems to have fallen off a cliff because they're locked down, but also just how much our company is going to try to game out what a 3 handle on GDP in China would look like just for their businesses, given the interconnectedness.
Healthcare, order demand strong, monitoring China. Aviation, demand remains strong, monitoring China. Macro headwinds. This is mixed, Tom.
Yes,
Let's just say
I'd say
that.
it's mixed to a little bit of a weight to it with the red sticky that just went out. GE says year adjusted EPS low end of a 280-350. So you're right, John. It's ambivalent, maybe to the downside a little bit.
The estimate 324.
Stock's giving me an indication down here. It was 90 and change, and I got a bid 87.
Isn't this the ultimate boomer stock, though? TK?
No, I think it's
GE.
the old days. That's the old days. You drove along the Mohawk River and waved in Schenectady at the beautiful old building and the GE sign. And there was a romance, and a guy named Welch was over in Pittsfield, and that was
Good times.
another time and place.
I know. Futures down 1/3 of 1%.
How's it down?
It's killing me this morning.
Isn't that the ultimate boomer index? The Nasdaq 100.
Let's talk
I thought he was going to do that.
1%. I thought he was too.
John, Fidelity announced they want to put Bitcoin in retirement plans. There.
How do you feel about that, Tom?
Oh, don't get me going.
Triple leverage.
Don't get me going.
Yields in 3 basis points on a 10-year, 278.
Stuff from Poland. Add that to the
55. Euro dollar with a 106 handle. We'll spend some time on that through this morning. From New York with Tom Keene, Lisa Bravitz and Jonathan Ferro for our audience worldwide. Heard on radio, seen on TV. This is Bloomberg Surveillance.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Keep talking about it. A big week for big tech. It starts after the close a little bit later with Alphabet and Microsoft reporting after the closing bell. Futures going into that negative about S&P by about 1/3 of 1%, or the Nasdaq by 0.4 of 1%. I'll get my words out. The Russell down about 1/3 of 1% also. Thank you, Tom. Two names after the close. Let's talk about the performance month to date and in the pre-market too. In the pre-market, we're down about 0.4 on Microsoft, and Alphabet we're pretty much unchanged. But on the month, Alphabet is down about 12% and Microsoft is down 9%. This month of April has been really tough for some of these big names, and that's why the likes of Dan Ives, of Wedbush, and pretty much everybody else is talking up how important earnings are through the week. Tuesday onto Wednesday, Facebook, onto Thursday when we get Amazon and Apple. Let's switch things up and just finish on this. I know you're focused on this, Tom. Euro dollar. Euro dollar has a 106 handle. So if you go all the way back to 2016, in late 2016, early 2017, we had a 103 handle. But back then, I would argue that that was an objective to get a weaker euro. Right now, this weaker euro could become a problem given where inflation currently is and the plans for the ECB to take things a little bit more slowly into July.
John, I really agree with that strongly, that this is a radically different point for the euro and frankly for everything else out there, particularly as you see renminbi, not much today, but 6.55 yuan. What's going to be interesting to me is the correlation is seen with euro yen. Retail doesn't follow euro yen. John, you know global Wall Street has it tattooed to its brain.
And that's the issue for global markets right now, Tom. I don't know where this is going and where this breaks. You've talked about dollar yen breaking out towards 130, euro dollar breaking down towards parity. Can the Japanese keep buying bonds, keep buying bonds, keep buying bonds, and ignore what the rest of the global central bank authorities are doing? Can the ECB sit out this rate hiking cycle? I don't think they can this time around.
Right.
But euro dollar at 106, Tom, with inflation pushing 8%. They got a problem.
My experience is they get overcome by events. Everything's planned out, all the setup you have, John. But the real issue here is you get a 104 euro, 130 yen. The story suddenly changes.
Like we're not far away, Tom.
No, we're not far away. Exactly. Okay, let's continue on in the American economy. Sarah House, we haven't done enough on this recently, folks. We're all Musk-focused. Sarah House is not, although she is on Twitter, senior economist at Wells Fargo, and joins us this morning. Sarah, we are in a Fed quiet period. What are they studying in their quiet period?
So I think what the Fed's really looking at right now is they prepare to accelerate the pace of tightening is, one, what is neutral? Two, what is potentially how far they will have to go above neutral? And then I think another question is just what effect does balance sheet tightening have on the economy? I think there's less certainty about that, and that's something that's obviously going to become very important as runoff begins in the coming months.
How, on a calendar basis, how far are they from neutral? Is it a late 22 event, or do you stagger out to 2023 to move from accommodation to some form of Fed neutrality?
So I think at the latest, neutral is at the end of this year. But I think given what we've seen in terms of the data, the fact that the labor market continues to tighten rapidly, inflation, we still haven't actually seen it recede quite yet, and the Fed rhetoric, I think we're potentially looking at neutral approaching even faster than that. So we're looking for 50 basis points here at the May meeting, followed by another 50 basis point hike in June. But the market's pricing in additional 50 basis point increases for July and potentially September. So you could get there by the third quarter of this year if the market's correct.
And we see a lot of people talking about how the rate scare earlier in the year will turn into a growth scare, Sarah, especially given what we're seeing in Ukraine and now given what we're seeing in China. How much do you think that that will accelerate the growth scare aspect that will actually slow some of the rate hikes that people are starting to price in?
Well, so I think we're actually looking at a place right now where there's still quite a bit of momentum in the U.S. economy. So when I think we discuss this growth scare, it's really more a story for 2023. I think, particularly when it comes to the consumer, despite some of the negative real income trends we've seen, there's still a lot of wind in the sails for spending. So both if you think about it from, the overall strength of household finances, the fact that the financial obligations ratio is at the lowest we've seen since records going back to the 80s. As well as just the sheer pent-up demand we still have for a lot of areas like services. I think there's still a lot of growth here in the near term. But when we look at when does growth get below trend, when do we really start to see that squeeze? I think we're looking at more of the back half of 2023 where that tightening in monetary policy really begins to be seen in the economic data.
So how do you think about what's going on with China right now? And I talk about China and not necessarily the Ukrainian war, simply because I think a lot of that was really brought forward in terms of the commodity shock. How much are you looking at the potential of these lockdowns in China as having a material effect in the U.S.? I know Europe is thought as being much more exposed, but the U.S. also, particularly with supply chains.
Right. So I think this is one of the biggest risks we see to the inflation outlook. So, we're all talking about the potential for peak inflation having been reached in March, but I think a big risk to that, in addition to just the sheer volatility and how rapidly oil prices can change, are those lockdowns in China and what that does to the supply chain. So really, in terms of inflation receding, we need that goods inflation to come down. So right now, core goods for the CPI, it's still up about 12% over the past year. So this is coming from, the past 2 decades where it's averaged essentially zero. So in order to help bring inflation down, you really need to see that goods inflation recede. And that's going to be very difficult if you don't get some further improvement on the supply front, which these lockdowns in China really throw into question.
Sarah, speak to the CFO of Microsoft, of Google, of, small cap stocks out there in some index, or Small Business America. When is the party over a certitude to pass on prices? When does that end?
Well, I think we're already beginning to see this. So our equity colleagues, so Chris Harvey and Anna Hahn, they've been tracking margins, and we've seen those come down since the middle of the last year. We saw it in the fourth quarter, and we've seen it so far in the earnings to date, that it is getting harder to pass on those prices as those margins have come down. And it's been particularly hard for your smaller businesses as well. So if you look at the small business survey sentiment, for example, optimism has absolutely rolled over, and a big part of that is declining profits, even as sales are hanging in there. But it does reflect that margin squeeze as input costs continue to rise, but consumers are starting to get a little bit more discerning in their purchases.
Sarah, this week we get a slew of data. We get economic data from the U.S. government. We also get data from companies as they report earnings. Which data points do you think will be most crucial for determining the path for the Fed going forward?
So I think really it's going to come down to Friday's data. So not so much the PCE deflator. We already have a decent sense of that based on the March CPI report. But I think the employment cost index is going to be a very important data point for the Fed in terms of determining how much wage pressures are still in the system. We've seen some signs of average hourly earnings beginning to moderate. If you're looking at it on a 3-month annualized basis, compensation plans among small businesses have started to come down. And so there are some signs of wage pressures easing, but I think the ECI is the one that the Fed really hangs its hat on. And so whether we do see that begin to moderate, I think is going to have important implications for what they say is some of the more sustainable inflation pressures in the U.S. right now coming from the labor market.
Sarah House of Wells Fargo, looking forward to the data on Friday. Sarah, thank you, as always. Politico just put out a piece on Elon Musk and Twitter. I thought this was interesting. They quote a House GOP leadership aide who said the following: "If I'm a Democrat, I'd pray that Elon Musk puts Trump right back on Twitter. I don't think it costs Republicans the House, but it certainly will elevate Trump's opinions and is going to put Republican candidates and members back having to answer for that." Tom, just a view in Politico this morning. This was a big question down in Washington, D.C., whether the former president would get back on that platform, Tom.
Yeah, and then, of course, he mentioned the timeout chair yesterday, the idea of moving from banning to timeout and all that. I'm going to avoid that chat, John, but I will say it's immediately politically important.
Going into the midterms, Lisa, later this year.
I will delve into this. It is a very tricky point. And honestly, we've had a lot of discussion about how over-sensationalized information in Facebook and the feedback loop can distort certain polarizations, right? This has been a big accusation. But what's the remedy to it? And is the remedy worse than the actuality by basically undermining people's faith in what they're seeing? And this is really the hot-button issue, and how Elon Musk is going to delve into this effectively and avoid the scrutiny in his other properties is going to be very interesting. I think that this is going to be a really ongoing conversation about free speech and the importance of it in the new era.
Bramo, here's another quote. On Monday night, a series of calls and texts with several top GOP insiders. Every single one of them told us they hope the former president stays the hell away.
Of course.
From Twitter.
This was a huge liability for them. They had to answer to a lot of the antics that are incredibly controversial on both sides of the aisle. I mean, this is actually a blessing for them.
Yeah, you'd think the Republicans, Tom, want the electorate focused on the economic issues of the moment, inflation and all of the above, and not on the former president?
I would suggest there are two Republicans. There's a Republican group that is enthused by the reascendance of President Trump, and there's another group that's less so. And again, I'll leave that to the political experts, John, but, you know, get out the calendar. It's April. This really fires up after the 4th of July.
Let's whip through the price action for everybody just tuning in. On the S&P, we are slightly negative by 1/3 of 1%. On the NASDAQ 100, lower by 1/3 of 1% also. Yields keep coming a little bit lower, sub 280 in the last 24 hours. We're down another 3 basis points this morning to 278.74. And we haven't talked much about China, but crude is slightly positive. We reclaim a 98 handle at 98.69 after having a little look at 97, 96, and maybe threatening to go even lower in the last couple of days. Lisa, China, the PPOC, pledging economic support. Every time the market gets into a little bit of trouble, that's the kind of verbal intervention you can expect.
Yeah, they also really eased some of the FX holdings at banks in order to facilitate some of the trade and actually create less of a move, less of a weakening in the yuan. I gotta say, though, what can they do? Can they do enough when their entire economy might be shut down?
How much of that China story do you think underpins that move in treasuries in the last couple of days? Yeah?
I think it's significant. I mean, honestly, what else can you point to?
278.74 on a 10-year. Coming up, Dan Kurtzfehlin, the editor at Foreign Affairs magazine. Looking forward to catching up with him from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. It will be one of the biggest leveraged buyout deals in history. Elon Musk clinched the deal to buy Twitter for about $44 billion. Taking the company private is just the first of what's likely to be numerous changes. Musk has advocated for removing restraints on speech and has cast doubt on the advertising model that accounts for the bulk of Twitter's revenue. President Biden may add a global food aid request to the military aid package for Ukraine that he's sending to Congress. The war has disrupted exports of wheat, corn, and other floods from Russia and Ukraine, and there's growing bipartisan support in Congress for providing as much as $5 billion in aid. Democratic Senator Joe Manchin is exploring an energy and climate package aimed at winning Republican support. A bipartisan energy package could undercut the broader Democratic agenda, but it could also give President Biden an election year win on an issue voters care about. Manchin says one area of common ground could be reform of the federal oil and gas leasing process. And Beijing has begun mass coronavirus testing of millions of its residents. It's part of an unprecedented scheme to quash Omicron's spread before it spirals out of control in the Chinese capital. Nearly 20 million people will undergo 3 rounds of COVID testing through the weekend. Securities and Exchange Commission Chair Gary Gensler has floated an idea aimed at increasing transparency in fixed income markets. He wants to slash the amount of time that traders have to report many bond transactions from 15 minutes to 1 minute. Gensler says that disclosures have generally failed to keep up with technology. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic. We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I simply don't think this is poised for ending anytime soon. If Russia does badly, Mr. Putin's not going to want to stop and admit that. If Russia does well, he's going to want to press his advantage. I just don't see the preconditions here of a successful negotiation anytime soon. To the contrary, I think one and all would be wise to prepare for a very long war.
That was Richard Haas, the president of the Council on Foreign Relations from New York City this morning. Good morning. Equity futures on the S&P and on the NASDAQ, negative 1/3%. Yields lower by 3 basis points, 278.93. In the FX market, we've talked about it a lot. A 106 handle on euro dollar, 106.92, negative 0.2 there. And crude essentially unchanged at 98.59, call it 98.60. Here's a number, a very, very depressing, uncomfortable number. As many as 8.3 million refugees are expected to flee Ukraine, Tom, by the end of this year, according to the UN Refugee Agency.
That is a humanitarian issue, and it is, of course, front and center for too many. Long ago and far away, think February 21st, I stopped and read Robert Kagan in the Washington Post, what we can expect after Putin's conquest of Ukraine. It was mesmerizing at the time as we were in shock of a new war. The war is not new anymore. Daniel Kurtz-Phelan, editor of Foreign Affairs magazine, has put together an absolute tour de force. Get the hard copy. This is the single best issue in years and years and years, maybe, Dan, since the last time you had a war to write about. Let me start with Kagan right now, and he speaks with eloquence about the endurance of the American experiment. How enduring are we right now?
Bob Kagan, in this trenchant and provocative and challenging piece called The Price of Hegemony, looks at Ukraine in the way it kind of changes the debate about American power and the use of American power. We've spent 2 decades really focused on what we used to call the forever wars on Iraq and Afghanistan, on some of the misuses of American power. And what I think Ukraine has thrown into sharp relief for a lot of people is that we're in a very different world where we're facing these great power challengers. This is not the kind of war that we've been focused on for recent years. And that puts this question of how America should use its power into a very different light. For Bob Kagan, he would like to see an expansive use of U.S. power, but that's the debate we're in, and it's going to be the kind of central debate of American foreign policy and in some ways U.S. politics for a while now.
Kotkin at Princeton, who folks owns the high ground on a guy named Stalin. The Cold War never ended. Okay, so it never ended if we believe Professor Kotkin. What is the now what for the new regime, the new administration, as they read this issue of foreign affairs?
So Steve Kotkin is one of the great historians of Russia, and I think what is so powerful about this piece and about his writing more generally is that he steps back from the focus that all of us have now on Putin and on Ukraine and sees this much larger challenge of Russian power and how Russia fits into Europe. And when Kotkin looks at it, he sees patterns that extend, that don't change fundamentally in 1989 when the Cold War ends, but really extend across these decades. And as Kagan would say as well, this is going to be this longer term challenge. Even if Russia is defeated in Ukraine, that does not change the basic problem of how Russia fits into this system. And there are some really hard unanswered questions that policymakers here and in European capitals are going to have to wrestle with, even when we get past this this existing war, which, as you all know, could still go on for some time.
To that point, Dan, how will history judge the Western response to Russia's land grab in Ukraine?
So I think we're still in early days. Obviously, it's already been a long war, and the toll, as you were just noting, has been terrible for Ukrainians, especially, as well as for Russian soldiers and Ukrainian troops. We're in a new phase now, in that we're going to be dealing with the long game here, and that's going to be more challenging than I think a lot of us have fully wrapped our heads around. The West has surprised everyone. The Ukrainians surprised everyone in the early phases of this war. The West surprised everyone with the force of its response, whether it's the sanctions or just the amount of military assistance that has gotten into Ukraine in the last couple of months, including from European powers that did not seem particularly comfortable with this kind of power before. But the question is, how long are these populations going to be able to sustain this kind of pressure, this kind of focus, especially as the economic toll starts to really set in? You have people who are willing to deal with higher energy prices for a certain amount of time. The politicians start to get scared in the U.S. as midterms approach, in Europe as the ongoing toll of this economic effects keeps affecting populations. So it's going to be a really long struggle, and keeping up that kind of pressure, keeping the international coalition together, is going to be really challenging diplomatically and economically and politically.
There's also the issue of the integrity of borders. Are there particular countries that your analysts and you have pinpointed as particularly vulnerable if Russia gets away with just simply grabbing land in Ukraine?
Certainly, I think if you're a small power in the shadow of China or Russia or even some of the regional powers, you're watching very closely to see whether the world kind of stands by this norm that has been at the center of global politics for decades or centuries. This idea that conquest is out of the international system. There's a great piece in the issue by Nisha Fazal, a wonderful political scientist, called "The Return of Conquest," and she really focuses on this question: what happens to all these small countries looking at Chinese or Russian power if we don't uphold this norm in Ukraine? So if you're, sitting in Southeast Asia, or you're sitting in Central Asia or elsewhere in Eastern Europe, it's really important to you to see this norm upheld. This idea that conquest is just not part of global politics anymore, because the reality of power in your environment changes fundamentally depending on what happens in Ukraine.
Dan, wonderful to catch up. Thank you, sir. Dan Kurtzfehlen there, the editor of Foreign Affairs magazine. Just something to look out for. We are waiting for a news conference from the UN Secretary General Antonio Guterres. That news conference coming after meeting, Tom, with the Russian Foreign Minister Sergei Lavrov.
Well, Lavrov changed the dialogue today. You even see it in market coverage where, there's a basic statement that Mr. Lavrov put a dampen on things in mentioning World War III. I would mention, John, that is the heart of the language of this war right now, this whole calibration of a greater conflict. And it can be up Eastern Europe to Finland. It can be a more Chinese discussion, whatever. But that speaks to the delicacies that do fold into the market barometer.
Any headlines from that news conference as it starts? I'll bring them to you. Be sure of that. Here's a headline for you from the Czech central banker, who's looking to hike rates 50 basis points in May, saying a peak of around 6% to be precise, is fairly realistic. They were at 25 basis points last May. They're now at 5%. That's just how quickly the story has moved, Lisa, on what they call extreme price pressure.
And how much are they trying to get ahead of the Federal Reserve? How much is the Fed really pressuring action and the acceleration, taking a move ahead of it to preserve the sanctity, frankly, of the currency and also foreign accounts? Honestly, this to me is one of the big questions. Is the Fed going to have to pare back some of its moves in response to emerging markets disruption?
This tightening cycle is very, very global in a way that I don't think it was the last time the Fed was hiking interest rates, given that the ECB is set to get into the mix, into the action too.
Maybe.
Futures, maybe. Futures negative 1/3% on the S&P. Yields lower by, let's call it 3 basis points on a 10-year, 278.74. From New York, this is Bloomberg.